because one's primarily about domestic policy and one's about foreign policy. I mean, Biden will be doing what he's doing with the G7, talking about Russian assets and how to deploy them to help Ukraine, as you and Lisa were talking about a few minutes ago. And what Trump's doing in Washington today, frankly, is fundamentally is making a pitch to business leaders and trying to show unity with congressional Republicans to show what a 2025 all Republican Washington might look like. Now, I think that's only about a 30% likelihood at most. The split Congress is a split Congress, and with a tiny Biden advantage is my call today. But even if Trump's president, markets should understand that what brought on the animal spirits in 2016 wasn't Trump being president. It was Congress going all Republican that allowed the 2017 tax cuts to happen. So, the Congress, frankly, here for what markets care about is more important than the president. And that's kind of what Trump's trying to show.
Terry, let's just sit on the business roundtable. We're not talking about any CEO. We're talking about the CEOs of the biggest financial institutions on Wall Street, the CEO of Apple. There has been a question more recently over the last few months, particularly on this programme, about how business-friendly a second Trump presidency would actually be. How business-friendly do you think it will be?
They'll try to make it so, and I think it probably would be should it come to pass. Although, as I say, it's not my base case. With a Republican Congress, I think what you get is, if you get an all-Republican Congress, just as in 2017, you see the Congress driving things like tax cuts and the policies that business cares most about. They were much more in the driver's seat than Trump was on that sort of thing. I do think that if you see a Trump presidency with a split Congress, though, you're going to see a lot more of what I've been calling recently Mount Trump. Where he pushes back against those who don't want to do whatever it is that he wants to do in the Congress. Now, that relates mostly to, I think, fiscal policy and domestic policy. Let's remember that in today's Washington, just as in 2025's Washington, you're going to have an awful lot of unity on foreign policy, all to the good, and you're going to have an awful lot of unity on fiscal policy that, frankly, makes markets feel squirrely because it's more fiscal spend, more debt and deficit.
There's a lot that you said there that I want to unpack, but Terry, this idea that we might hear what a second term of President Trump might look like, what are you listening for, especially when it comes to the business world at a time when a lot of people really don't have certainty around that?
Well, it's a pitch. He's here for a lot of reasons, and just as any politician, you're trying to not only show what you do think, but you're trying to show what kind of reality you'd like to create. He's in the business of showing a couple of things. One, that he's business friendly, and secondly, that he's going to be a kind of a rational actor on a lot of this stuff. And he was on tax cuts. And one of the things that he wants to do is remind people that they'll continue to be a business. He'll be a business-friendly presidency, that he wants them to, and they should want to support Republican candidates in Congress to create that all-Republican reality that allows them more business freedom, less taxes, less regulation, that sort of thing. And he also wants to show, frankly, that he's worthy of being supported financially and rhetorically and every other way, because the reality, again, is he doesn't have a united party, and he's not attracting independents. One way to do it is to show he's clearly differentiated on economics.
Terry, you said that there also seems to be some unanimity on foreign policy at a time where President Biden is at the G7 trying to sort of immunize international policy from elections, given some of the latest moves on Ukraine. How do you square that? What does the united front in the U.S. look like when it comes to foreign policy and what's likely to come down the pike, regardless of who takes office, but maybe with a greater emphasis with another President Trump?
Well, you're going to have a situation where in 2025, regardless of who the president is, where the vast majority in Congress, and I think the vast majority of the public too, supports current U.S. foreign policy, supports helping Ukraine, supports helping in the Middle East, helping Israel, and getting peace there, helping in the Indo-Pacific, all the rest. One of the things that took so long in getting that aid, though, frankly, is that Biden was not very good, very forceful, pushing very hard to actually get that. It said everything that Biden announced this emergency in November, and yet no one, Democrat or Republican, on the Hill really reacted to it, and it took almost 6 months to clear it up. I suspect what you're going to end up seeing is a lot more urgency down the line, and I think just as last time, Trump largely gets led by Republicans in Congress to create a foreign policy and an economic policy that continues along the same lines. You may see a little skepticism on the margins, but right now I don't think it's going to be that significant.
Hey, Terry. Good to catch up, sir. Terry Haynes of Geopolitical down in Washington on the latest. Quite a scheduled side-by-side, but given how late either could be, I imagine it's not going to happen precisely at the same time.
Nonetheless, the focus on domestic versus international, very interesting. And Terry is saying that there's quite a bit of consensus and that they'll come together around pretty much the status quo and continuing it. Sort of flies in the face of a lot of the rhetoric that is highly nationalistic that we're hearing globally and that we're hearing here in the United States. So I wonder just how it plays to the electorate. I understand what actually might happen is different than how you play it, but that's what I'm actually curious to listen to.
No, I'm with you. I think you're on the right line of questioning. There is some daylight, some real daylight between what they're focusing on at the G7 today, tapping into Russian assets, and what national electorates are voting on at the moment, based on the outcomes of those votes. Which is the reason why you really identified how weak all of those leaders are as they stand for the family photo at G7. Coming up just around the corner, G7.
The most meaningful evolution begins inside. Alive in time. Grand Seiko Evolution 9.
Cashback on dining. Cashback on groceries. Cashback on gas. The TD Cash Credit Card lets you customize how you earn cash back so you can earn more. TD Bank. Unexpectedly human.
Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Or other authorities.
Could face bigger challenges.
What's next?
It was going to keep Green World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
2 hours away from the opening bell, equity futures on the S&P just about positive by 0.1% after closing at another all-time high in yesterday's session. Bramo's counting. What are we on?
28.
28 record highs on the S&P so far in 2024. On the Nasdaq at the moment, we're up by 0.6%. The Russell had a day. Is it anything more than a day? We're down by 0.4%. It's a question I've got. I know you've got it too.
Well, it was a day, but it wasn't that great even compared to the Magnificent Seven because they still were overshadowed. I was looking at this. If you take a look at the Russell 2000, it was up 1.6%. The Mag 7 was up 1.9%. And it was really just Apple and NVIDIA. I mean, people say we don't talk single names. Okay, you don't talk single names. How about the leader in chips? How about the leader in smartphones? I mean, it's basically, we're talking about the same thing.
Look, leader in smartphones and chips, high rates, doesn't matter. Low rates, doesn't matter. Does rates even matter when it comes to these names?
You know, this is what I was thinking. Why did they get a boost from the idea of inflation coming down? What logic is that? Because arguably you could say that their income would actually go down if rates came down, given that their cash piles are now generating 5.5% interest. So at a certain point, really?
Saw some big moves in the bond market yesterday. Let's get you up to speed. So yesterday, CPI drops, 8:30 Eastern time. Yields plummet. See a big plunge lower. Double-digit basis point move right across the curve, particularly on the 2-year. At one point, we were down about 16 basis points at the front end of the yield curve. We gave half of that up once the news conference and projections really started to filter out. We started to process that this Federal Reserve really wasn't in a rush to adjust after that CPI report.
Dovish nirvana would have been 2 rate cuts baked in, down from 3, in terms of the statement of economic projections. They only had 1, although with an asterisk. It was a pretty messy kind of combination and mix of different Fed officials. And then you would have had Chair Powell sort of undo some of the hawkish tilt by coming out and saying, actually, we just didn't really incorporate the CPI data and that could change things. He did not. He indicated they had seen it. So this all leads kind of a mush. And then you have people like Wei Li actually came out of BlackRock and she said, you know, the Fed doesn't know anything more than we do. Don't listen to them.
And by the way, there's some reason to believe that maybe those jobs numbers on Friday were overstated.
Yeah, did you like that?
It's quite aligned in that news conference, I thought. Lots of people picked up on that.
Well, the reality is it was confusing to everyone. And he said that he couldn't reconcile it. And they've been very clear about the fact that sometimes they can't reconcile it and they can't create a narrative. But the fact that overstated was the way that he went indicates sort of a dovish lean.
So the euro got a bit of a bump yesterday, some strength. The dollar weaker off the back of all of that, particularly off the back of the move in the bond market. Today, the euro just a little weaker, retracing some of those steps. 107.88 on that currency pair. Under surveillance this morning, Fed officials dialing back their expectations for rate cuts. The median projection now calling for 1 cut this year, even as US CPI came in softer than expected. Another read on the US economy, 8:30 Eastern time. We get PPI and jobless claims. Jobless claims, the estimate in our survey, 225. The previous number, 229. Given his comments on the labour market on Friday, just plays into what I think a lot of people already believe, which is this Federal Reserve is willing to ignore what looks like strength, but on any sign of weakness in this labour market, they'll be willing to move and cut interest rates.
And, you know, on the margin, that was kind of emphasized yesterday because the disinflation was really sort of front and focus. And they indicated they'd be willing to cut rates, even with inflation projected to be even higher than they previously expected next year, in the face of labor weakness. And to me, this is really the key. They're still hoping for that soft landing. They still want to land it. And that, I think, is a reason why a lot of people are saying, OK, we're not late cycle anymore. Suddenly, maybe we're mid-cycle. We got some more legs in this rally.
Mike Collins of PGIM joining us later in the programme to weigh in on some of this. I want to talk about Tesla just briefly. Shares are rising in the pre-market, up by something like 5% a little bit earlier this morning. Where are we now? Up by 6.8. Elon Musk saying shareholders voted, quote, by wide margins in favour of reapproving his $56 billion pay package and moving the company's official headquarters to Texas. The preliminary results coming ahead of the company's annual meeting in Austin today.
This just crossing, reporting by the New York Times Deal Book saying that Vanguard and BlackRock both voted in favor of that $56 billion pay package. So he got some of the big behemoths lined up behind him. Curious to see what the sort of win is in terms of the share pop. Is this essentially that they're not going to get any pushback or that Elon Musk isn't going to threaten to leave? It's not going to cause more turmoil at the top. What was the consequence if he didn't give $56 billion?
I don't know. It would be a real question mark over whether he wanted to continue leading the company, though, wouldn't it?
I mean, he still has a lot of money tied up in this company. And honestly, that's quite a look if he says, OK, I got $47 billion. No way. I'm out. Peace. I mean, at a certain point, really, can you do that?
My question is, you have to take the character out of this. I understand he could be polarising, whether you like him or not. Let's just remove Elon Musk from the conversation. And let's just say you've got a CEO of Company X. Maybe not Company X, that doesn't work. Company Y. You know where I'm going with that, of course.
Yeah.
Company Y, all right? And you say to this CEO, these are your milestones, you hit them, this is what you get. And people sign up for it, they vote for it. And then further down the line, they get to vote on it again. Never really made sense to me.
I hear what you're saying, which is basically, again, precedent. And how do you sort of understand the precedent at a time when this is somebody who is highly polarizing, but it's not sort of a popularity game necessarily. And he is still the founder and, frankly, the face of Tesla in every which way. The key point to me is there is some pushback. There's a question of where his allegiance is. And the bigger question for Tesla going forward is less how much he gets paid and more where he wants to put his chips, literally and figuratively, when he's trying to move out into more of a technological focus.
Over at Company X.
Exactly.
Apparently. All right, let's move on. G7 nations agreeing on a structure to use profits generated from frozen Russian assets to provide $50 billion in fresh aid to Ukraine. Bloomberg's Anne-Marie is on the ground in the south of Italy at the G7 and helped break this story. AMH, share the details with us.
Well, Jonathan, they've been working on months to try to get this deal over the finish line, and they are set to sign off on this today when G7 leaders will be meeting. What they're going to do is tap the future interest of these immobilized frozen Russian assets, $280 billion worth, which mostly sit in Europe. Now, the Europeans had agreed. This has been fraught negotiations for months. The Europeans had agreed to do this on a year-by-year basis. What the United States has been wanting to do is take the accrued interest that they expect from these frozen assets and front-load it now to Ukraine to get Ukraine more money up front and also really election-proof this, meaning by the end of the year, Ukraine would get $50 billion in financing, loans from the countries that are willing to sign up. The issue, of course, is going to be some of the technical details they're going to work out after the G7, but the political will is there, and they plan to go ahead with this. Of course, the big question is how do they get paid back? So those countries in the future years will get paid back those interests on these frozen assets. But this is a huge win for Ukraine. You remember what Dmitry Kuleba said to you, Lisa, and myself at Davos. He talked about the fact that this was a critical goal for Ukraine for 2024, and that once the politicians signed off on it, the bankers and the lawyers, they'll find a way to make it happen.
And they're making it happen right now. Reportedly, Anne-Marie, great work as always. Anne-Marie Hordern at the G7 meeting in Italy. With us around the table is Stephen Cook of the Council on Foreign Relations. Stephen, good morning to you. It's good to see you.
Good morning. Great to be here.
Let's just talk about the difference between what voters seem to be voting on right now and what leaders seem to be talking about at the G7. How big is that gap at the moment?
Well, it seems to be a very big gap. I mean, Americans in particular are concerned with the southern border and issues here in the United States, whereas, once again, the G7 are proposing to shovel lots of money in the direction of Ukraine. There's a case to be made for this, especially since these are Russian assets, but that's not the way it necessarily is translated among the American people. So the president, people in Congress need to make this case, and they don't seem to be making it.
What's the consequence of the greatly weakened nature of a lot of the leaders in G7 as they talk about some of these foreign policy initiatives? Is there any historical analog that you can draw back on for guidance on how this is going to transpire and how it's going to shape policy?
Well, the weakness of the G7, the weakness of the West in general, has encouraged people like Vladimir Putin, the Iranian leadership, to press their advantages in different parts of the world. When the United States has demonstrated weakness, particularly in the Middle East, the Iranians, now partnered with the Russians, have pressed their advantage. The chaos that we're seeing in that part of the world, the attacks on Ukraine that are unrelenting but have been fallen off the radar screens, are things that are dangerous to the Western political order. And we have a bunch of weak leaders who have been unable to make the case to their people.
Donald Trump has argued that under him, none of this would have happened. And some people say, maybe that is a bit of a stretch. There still were tensions under his rule as well. But other people have had some criticisms of President Biden's approach. What's your take on how he's countered sort of the growing unity of some of these nations, Iran and Russia in particular?
Well, count me as one of those skeptical of President Trump's argument that none of this would have happened under his leadership. I do think that President Biden was dealt a weak hand, particularly on Ukraine, and has in general held Europe together on that, despite the tremendous opposition within the U.S. Congress on Ukraine. The Middle East is somewhat of a different story. He has wavered in his support for American allies, particularly Israel. I mean, there has been tremendous amount of bloodshed here. But the way in which the president has sort of tried to cut deals and navigate between different political pressures here in the United States has essentially weakened the American hand in the region. And that's not what not only the Israelis, but also the Saudis, the Emiratis, the Bahrainis, and other partners of the United States, they want to see a strong hand against the Iranian malevolence in the region, which, of course, this horrible war in the Gaza Strip is all about.
So your book, the title, I want to borrow the phrase, The End of Ambition. Can we talk about that a little bit more? Do we have this reluctant hegemon? Is it tempted by isolationism? What is it all about right now? What's taken us down this particular path?
Yeah, after a period of about 25 or 30 years in which the United States engaged in this very ambitious plan to transform the region, there is a sense within, especially the American foreign policy community, but I also think among the American public at large, that the United States should withdraw from the Middle East. The investment wasn't worth it. And what the book says is, actually, there is an investment to be made in the Middle East, but not to transform the region, but to laser focus on what is truly important to the United States in the region.
What is truly important to the United States in the region? Because there are some people sitting at home at the moment, many, you see it in polls, they just look at what's happening abroad, they look at the G7, they look at the things they're talking about, and they say, this world order does not work for me, I'm voting for something else. What should the focus be? Yeah,
well, I lay out in the book 6. I won't bore you with the 6, but a number of them should be familiar to people, including the free flow of energy resources out of the region. Everybody remembers the price spike of gasoline at the pump in 2021 and 2022. Middle East is very, very important for the free flow of energy resources. Continuing to help secure Israel is a very important thing to many Americans. Counterterrorism, especially in this moment of turbulent world politics, and of course, non-proliferation. These are all things that remain important for the United States and things that the United States should invest in. Not remaking Iraqi society, not promoting democracy in countries where leaders are going to resist that and where we can't achieve those things. The 4 things I just mentioned are things that are actually achievable.
More pragmatic approaches rather than ideological ones, I think
Absolutely.
is one way of putting this. We were just speaking with Terry Haynes of Pangea Policy, and he was saying, actually, there is some unanimity when it comes to sitting Congress members in terms of maintaining some of these relationships and the U.S.'s international footprint. Is that true? Is that your take on it, too, given the fact that the rhetoric seems to be pretty much at odds with that?
Yeah, Washington is deeply, deeply polarized. And I think the war in Ukraine is something that has really exposed those rifts. I think by and large, people want to maintain those relationships, that the United States is a global power. But there are questions remain as to how long and how open-ended the United States support for Ukraine, which is not a NATO member, is going to be. From my own perspective, we should continue to support Ukraine because after Ukraine, the Russians will set their sights on actual NATO members. That we really need to actually, to use a terrible cliche that people use in Washington, draw a line in the sand when it comes to Ukraine.
Are you convinced they will, that they'd go after NATO members? They'd test that line, they'd cross it.
You know, it's hard not to take Vladimir Putin at his word in these speeches that he has given in the past about essentially the recreation of the Russian Empire should be taken seriously. No one took, on the eve of the invasion of Ukraine, both in 2014 and in 2022, no one took it seriously. And yet he moved against Ukraine.
It's very true. Stephen, it's good to see you. Thank you, sir.
Thank
Stephen
you.
Cook there of the Council on Foreign Relations. So let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Boeing is set to face FAA scrutiny for the, quote, foreseeable future. That according to prepared testimony seen by Bloomberg. The agency is set to place more inspectors at Boeing's facilities and at supplier Spirit Aerosystems. Boeing will face a hearing today in Washington after multiple safety concerns emerged about its planes since a January 5th accident that saw a fuselage panel blow off. Sony has acquired theater chain Alamo Drafthouse, who pioneered the in-movie dining experience. Terms of that deal were not disclosed. The acquisition comes as Hollywood box office revenues and national theater audience struggle to recover from the pandemic. Alamo Drafthouse is North America's 7th largest theater chain, with 35 locations across the U.S. Smaller private credit funds are struggling to fundraise. The latest figures show that the big funds keep getting bigger, as fundraising as a whole last quarter was at its lowest since 2020. That according to Preqin data. I spoke with $31 billion debt manager Arcmon and asked its CEO if that means more consolidation is on its way.
Yes, I think it's inevitable. I think as the asset class has matured and essentially grown up, one thing is absolutely clear, that LPs, investors, want players with size and scale. Investors are looking for scale players. I think also the larger players have managed to do larger deals, which by and large are safer deals. So that's also reflected in better portfolio performance. And you are seeing really a significant number of consolidation events.
Anthony Phobel spoke with me on Bloomberg Brief, which is every weekday at 5 a.m. Eastern. And that is your brief. John.
I watch it religiously, Danny. You know that every morning. Danny, thank you. More from Danny in about 30 minutes. Up next on the programme, the fine line between 1 and 2.
The difference between 2-cut and 1-cut median is 1 member. This is a very fine point to be seeing, pretty big shifts in market pricing.
That conversation.
It's everything you wish for. Your site traffic is skyrocketing. Until this happens. Be careful what you wish for. Build your site on a platform that's engineered for success. So as traffic spikes, instead of overloading your servers, your site infrastructure scales to handle it. Backed up by tens of thousands of servers worldwide, maintaining 99.98% uptime. Wix.
Whatever you do it for less at Harbor Freight.
Real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a quieter session, let's put it that way. Equities are just a little firmer by 0.1%. Bond yields are basically unchanged at 431.41. A little bit of price action in the commodity screen. Crude's down 9/10, 77.76. Under surveillance this morning, the fine line between 1 and 2.
The difference between 2-cut and 1-cut median is 1 member. This is a very fine point to be seeing, pretty big shifts in market pricing. I think the broader theme here is this is still a Fed that is looking to cut rates, very supportive to financial markets. I think this is a pretty good setup here for bonds and stocks.
So here's the latest. Treasury's holding steady after a volatile day of trading sparked by cooling inflation and a hawkish Fed tilt. The central bank penciling in just 1 quarter-point rate cut this year, but investors still favouring 2. Michael Collins of PGIM Fixed Income joins us now for more. Mike, in many ways, the median sort of masks the division, the split on the FOMC. How fine a line is it between 1 and 2 for this year?
Jonathan, it's really a coin toss. I mean, I don't think that's a big deal at all. I think the markets and even the media are making too big of a deal of the difference between one or 2. Remember, before yesterday, the Fed had penciled in basically over the next 3 years, 3 cuts this year, 3 next year, and 3 the following year for a total of 9. Now they've penciled in 1, 4, and 4. for a total of 9, right? They get to the same place in 3 years. I mean, if anything, the potential mispricing in the market is what's ultimately priced in, right? The markets are only pricing in 7 cuts over the next 2 to 3 years, not the 9, and stopping there. And remember, the Fed's long-term dot, even though it's gone up, it's still 2 3/4, right? And the markets are almost 100 basis points above that. So in the near term, again, the difference between 1 or 2, I don't think it's possible to make a lot of money trying to bet one way or for or against that. But over the long term, as Jeff Rosenberg said, bonds are cheap.
Bonds are cheap because you're expecting more easing here, Mike? You're expecting the Fed to deliver what they're signaling?
Over the long term, I don't think they're going to stop at 3 5/8 or 3 3/4. I don't think they're going to stop, after 7 cuts. That's what the markets are telling us they're going to do, right? The markets, John, effectively have priced in a permanence of this higher growth, higher inflation, and higher rate world that we're living in today. The markets are really discounting the possibility that you have, 300 basis points of rate cuts at some point in the next 5 or 10 years. And I'll bet that there's a higher probability that the Fed cuts more aggressively at some point in the future than this really sanguine view the market has.
Mike, let's dig into that a little bit more. Why do you think that is? Because you think that the economy is weakening much more significantly than people expect? Or do you see on the other side that normal looks similar to what it did before the pandemic?
Yeah, I mean, I just think the high growth. Look what's happening in Europe and the UK, right? They're cutting rates, and Canada, their growth rate in Europe and the UK, Lisa, since COVID is 0. They have not grown at all. They've just recovered back to where they are. Obviously, the U.S. has been the shining star in the global economic picture. And yeah, maybe that's sustainable. Maybe the AI and the productivity boom associated with that is sustainable. But I do see, a lot of challenges, among consumers, a lot of challenges among small businesses. I think all this wealth creation, and the benefit of higher rates and the benefit of high home prices have really gone to a small portion of the population. And I think the higher these rates, the longer these rates stay high, I think it really does weigh on demand. And you're seeing that, right? You're seeing consumers trade down. You're seeing businesses start to push back on some of their capital investment because of the higher rates. Financial conditions are easy, except for the rate part. The rates are too high. And Powell admitted that yesterday. He admits rates are in really restrictive territory, and he needs to cut them eventually. And I'm just in the camp that, the funds rate is probably going to average, 3 or 3.5, not, 3.5 or 4 over the next 10 years.
So, Mike, right now we're looking down the pike at a 1 p.m. $22 billion auction of 30-year notes. You say bonds are cheap. Are you going to be there basically shoveling up as much as you can?
Well, we've had a big rally in the near term here. I think it does make a little sense tactically if you could trade rates really tactically like we can to maybe even take profits on this big rally. I mean, rates have rallied 40 basis points really quickly here in 10-year space. And so in the near term, there may be a little bit of a challenge digesting some of these huge auctions. Obviously, the 10-year went great. But again, over the long term, you look where our rates are versus Europe, right? We're still almost 200 basis points above Germany. We're, 350 basis points above Japan. The world, the central banks and the big pension and insurance companies and financial institutions around the world need yield. They need fixed income. And our markets just stand out to me as being really attractive.
So tactically sell, strategically buy. Just so I'm super, super clear, Mike.
Yeah, I think tactically, we're a hair short in some of our duration in some of our portfolios right now, just on the view that the Fed has historically dragged their feet on taking action, right? That first move is a big one. Powell mentioned that yesterday, right? The first move is a signal, and the markets tend to run with that. And I don't think the Fed wants the markets to get too far ahead of themselves in terms of easing financial conditions even more, right? So I still think there's a decent chance that 0 rate cuts comes into play this year. So we're kind of fading, the 2 that the markets are pricing in a little bit here. But wow, if you're a real, long-term investor like we are, and most of our clients are, Jonathan, and most of the people in the world really are, you're supposed to own more fixed income. It's really in the sweet spot, and there's a lot of value.
I got it. I'd love your thoughts just finally on this. I got this note from BNP Paribas just months ago. It came from Yelena Shuletseva, former colleague of ours, good friend of this programme, who said, November, first move potentially in September, but presidential election uncertainty would argue in favour of waiting until December. November is the month where there seems to be an issue for people, Mike. What do you make of that this Federal Reserve would be thinking about the outcome of November and would rather wait until the back end of this year to see how things work out?
Yeah, I mean, that's part of the problem, right? They're running out of, they have 4 dates left, right? And a lot of people are just discounting July altogether. September is only 6 weeks before the election. And, I really think you need to see the data shift pretty abruptly from where it is today. You need a much more decisive reason to cut rates 6 weeks before the election, just as a real, because of the potential political blowback. And obviously November 7th is 2 days after the election. There's a good chance, Jonathan, that we don't know the results of the election at that November Fed meeting, right? Is the Fed going to want to cut rates when the result of the election is hanging in the balance? I don't know. So you're really running out of dates, which is why I think, heck, there's probably an equal chance of 0 cuts this year as there are 1 and 2.
True. Mike, thank you, sir. Mike Collins of PGIM, fixed income, plenty to think about. Might not be settled in November. Might have to wait for runoffs. Remember, the Georgia runoffs didn't take place until, what was it, early January 21.
Yeah, and we heard about that from Amy Silverman talking about some of the derivatives action. My takeaway from this, and a lot of conversations that we've been having, is that essentially people like bonds once the Fed starts cutting. So basically everyone's treading water before really seeing the sign that they're actually going to make that move. And then can you imagine, let's take a poll of what kind of rally we're going to see. How many basis points of a just absolute plunge do we see in yields pretty much across the curve?
Forgive me for being on the fence, but it really matters what the backdrop is. So is this a mid-cycle adjustment? Or is this like unemployment surging and the rate cutting cycle starts? Because if you listen to what Mike's got to say, and I'll throw in Mike Schumacher of Wells Fargo, they're thinking about the same thing, that when this Fed cuts, it's going to be a cycle. It's going to be deeper than you think it is because they're going to be confronting real economic weakness. That's their call.
And if they don't cut rates this year, the Fed, how much deeper could those cuts be next year, right? I mean, I think that's what a lot of people are trying to crystallize in their minds.
We've got a lot to talk about. We'll do that in the next hour. Joining us is Gargi Chowdhury of BlackRock, Bloomberg's Craig Trudell. The latest with Tesla with that stock up big time in the pre-market. We'll speak to SocGen's Subhadra Rajappa and John.
Now made from Daya Oat Cream Blend. Daya, dairy-free dairy.
Businesses, it is about resilience. It's about pressure. It's about women. So how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Aman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people. It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is a Fed that focuses excessively on the past and doesn't want to signal much about what's ahead.
Central bankers don't shout mission accomplished.
They are very deliberative right now in terms of not getting too far ahead of themselves until the data comes to them.
The data is probably more important than the dots in this case.
This is still a Fed that is looking to cut rates, very supportive to financial markets. So I think this is a pretty good setup here for bonds and stocks.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
There's certain things as a broadcaster you enjoy doing, you don't get to do very often anymore. Tiger Woods leading the US Open. I get it. He's played one hole and not everyone's teed off just yet. But he leads the US Open at 1 under. One hole played. But, you know, come on, it's Tiger Woods. I can enjoy it just a little bit, just for a moment.
I'll sit there with you. I'll enjoy it. Okay, done.
Scotty Scheffler a little bit later with Xander and Rory teeing off at about 1:14 Eastern time.
Okay, to be completely honest, I don't follow the actual game, but the fact that Rory's getting back with his wife seems like a big deal.
There you go, you see?
Yeah, that I can kind of get into.
Some news you could use this morning.
Big time.
All right, quite a session in the market. You can tell, can't you? From New York City this morning. Good morning, good morning. Equity futures on the S&P 500 positive by 0.1%. Plenty of reaction to the CPI data of yesterday morning and the Fed decision in the afternoon. This from Citi's Andrew Hollenhorst just moments ago. It's about the data. It's not about the dots. So let's talk about the data. Have we learned over the last couple of months that basically the Q1 inflation data was a bit of a head fake, Bramo?
Well, that's really what people are leaning into. Let's just go over what we got yesterday at 8:30 a.m. Eastern. We got the slowest month of core inflation since August 2021. So that really shows progress. On a year-over-year basis, when you look at core CPI, it came in at the lowest level going back to April of 2021. So really, you could see this just grind lower. To your point, a lot of people embracing this as the disinflation that was delayed, not just taken off the table entirely.
So Team September still thinks the door is open, but this is what Team December's got to say. You following? I hope so. This is what Yelena Shulitseva's got to say. I mentioned this from BNP Paribas months ago. I think it's worth sharing again. We continue to expect the first cut in December, even though progress on inflation could imply conditions for a first move in September. Here's the key line. Presidential election uncertainty would argue in favour of waiting until December in their view. How important is that this year?
Can I just say how remarkable it is that we are baking in the understanding that this could be, or very likely will be, a contested election that will go on for longer than one day? I mean, that's the base case right now for markets is rather shocking. And yet here we are, and people are trying to understand how to bake that into their assumptions. A lot of people agree with her. Basically, this is a fraught moment. So here's my question. Does this make it actually more likely that the Fed will cut more deeply in 2025? Or does this basically just delay the same rate cutting cycle that the Fed otherwise would engage in? In other words, how much does it weaken the U.S. economy to have the Fed on hold for a longer period of time than maybe the data would warrant?
So I don't have a base case, because I think it's tremendously difficult to establish one for 2025.
That's
what
fair.
I sense from market participants is what they're doing at the moment is pretending it's not happening, extrapolating out current trends, and then they'll think about it once we get to November. Do you have a split government? Do you have a blue wave or a red wave? Do you have conditions that change things markedly in 2025? Super, super hard to forecast, but we have to do the scenario analysis, and we did a few weeks back. Adam Poston of the Peterson Institute making the case that you could see some quite remarkable policy changes on the trade side, on fiscal impulse that could lead to conditions where this Federal Reserve might have to consider hiking. Now, again, that is super, super contrarian, but that's a view from Adam Posen. And people are thinking about those kind of things. Things could change a lot in 2025.
This is why I actually think it's rather significant that a lot of business leaders, financial leaders are meeting with Donald Trump today, because there is this feeling in the market that Donald Trump would be sort of the change agent rather than President Biden, considering that he's already been in office for 4 years, and that if he were to come to the fore, he'd be very cognizant of the market's response to any of his proposals. So that would be sort of the gut check on anything that he would do. I'd be curious to see what the tone is with some of these business leaders, because that's ultimately what a lot of people are saying is keeping a lot of those expectations in check. Ultimately, markets will have the final word. That remains to be seen.
You'll hear from the former president a little bit later on today. Equity futures on the S&P. Your scores look like this on the S&P 500, adding some weight to yesterday's all-time high. We're up another 0.1%. In the bond market, yields just about unchanged at 431. The euro not doing much, a bit weaker over the last hour, 107.83. Coming up this hour, we'll catch up with BlackRock's Gargi Chowdhury with stocks at record highs. Bloomberg's Craig Trudell as Tesla shareholders vote on Elon Musk's $56 billion pay package. And Subhadra Japa of SocGen reacting to PPI and jobless claims data, which drops in about 25 minutes' time. We begin with our top story. Stocks trading at all-time highs after inflation cools and the Fed leaves rate cuts on the table. BlackRock's Gargi Chowdhury staying constructive on equities, saying this: while the macro picture has been a bit uncertain, the strong earnings we've seen from quality companies keeps us convicted. Gargi's with us around the table. Gargi, good morning.
Hi, good morning.
Not going to ask you about the politics. I'm sure you feel good about that. Not even going to ask you, first of all, about the Federal Reserve. We'll get to that in a moment. Do you think that some of the trends you see that make you constructive on equities are independent of all those things put together?
I think so. I think when we look at earnings for the entirety of the year, you see the companies that have the strongest balance sheets continue to be able to throw off cash flow. And those are the companies that are leading. Not every day. Obviously, yesterday we had a little bit of a small cap bounce. And I think we can continue to see pockets of weaker balance sheet companies having catch up. But if you look at a sustainable period of time, if you look over the next 3 to 6 months, then quality wins out.
That's leading to market concentration, as you know. Should I be concerned about that? Should our audience be worried about that?
I think that obviously whenever we see gains led by a few companies, we get scared about what that might sort of allude to. But I think broadly, if those companies also tend to be companies that actually are showing profit margin, that they're actually showing a huge amount of cash flow and very low leverage, we think that's a good sign. Now, what we're telling our clients to do is to have quality at the core of their portfolio and then go to a few other areas of the market that have not participated as much, be healthcare, some high-quality parts of financials. Even right now, we're kind of thinking about, sort of infrastructure and utilities as other ways to play for the catch-up trade.
Did yesterday change anything for you?
So yesterday was a fun day. I think hearing from Chair Powell, seeing the one dot was a little bit of a surprise, given that the data hasn't meaningfully shifted in a hawkish direction since we last heard from them. So to see 3 dots in the April meeting and 1 in the June meeting was very surprising. But did it change anything for me? I think what it did change was a recognition that this is a Fed that's going to remain data dependent, just like they didn't overreact to the stronger inflation data in the beginning of the year. They're not going to overreact to the weaker inflation data. And I think what this means is we have a pretty stable Fed chair at the helm, which I think is a good sign.
A lot of people taking this as bullish. We've heard that consistently from a whole host of different guests, that this basically means risk on. They're going to have your back, essentially a Fed put. If there's weakness, they're going to respond to it, just like what you just said. How much do you lean into the idea that once they start with cutting rates, it will be a cycle, it will be deeper, and it will be something that will ratify what Mike Collins just said, which is bonds are cheap?
Bonds are cheap, especially front end of the bond market, definitely throwing you a lot of really amazing income. So I think investors should take opportunity of that. But I'd also say that when we think about broadly what the Fed is trying to tell us, they're trying to tell us that they're keeping all optionality open and they really want data dependence, whether or not the market believes that. So in 2025, and this is not the base case, but if we begin to see inflation pick up again, Will this be a cycle of cutting rate? No, maybe they pause again. They can start this year, they can start as early as September, maybe December, cut rates a few times, and pause again if inflation doesn't allow them. So what I feel very comfortable about is this is a Fed that's going to remain data dependent and not overreact on one side or the other, which, with the strong growth that we're seeing, is actually very good for markets, both bonds and equities.
You mentioned the front end of the yield curve. Can we talk about the complete yield curve?
Yes.
Still deeply inverted, negative 40-something basis points, the 2-year versus the 10-year. Have you got an argument for why people sitting at the front end right now should consider going further out along the curve for less yield? What is that argument at the moment?
So the argument right now is if you're sitting in cash, do step out of cash and sort of start buying some of these very high-quality assets in investment-grade credit, in CLOs, in even certain pockets of high-quality, high-yield and treasuries, but keep your duration to about 3 to 5 years. I think that is the argument. Step out of cash, step out of 6 months, go out to the 3 to 5 year. There isn't really a meaningful argument to extend duration further than that, given, to your point, the shape of the yield curve. Now, the argument could be, in another world, that growth is decelerating meaningfully and you need that flight to quality bid for duration. We're not in that world right now. Further, given the pressures on fiscal that we're going to have regardless of the election outcome, I think that brings into question why don't we have enough term premium in the yield curve? And at some point, if the market begins to price that in, you're better off, again, in that belly of the yield curve.
It kind of is concerning to me that so many people are going to be really reactive to all of the data and the Fed proclamations, not because I think they're wrong. I think that probably that is the way to go. But does that increase the fragility of markets, that there's huge floods of cash that potentially can shift around all at once? That essentially this is a market waiting for a catalyst, and then you will see that just absolute flood of cash that could overwhelm, frankly, markets that look liquid, but a lot of people are arguing are less than under the surface. Does that type of volatility concern you at a time where bond yields already are swinging around quite a bit?
I think that I don't think concern is the right word here. I think it's something that we have to be thoughtful about. I think when you look at the availability of cash, the $6 trillion of cash that's sitting in the sidelines, that's not a risk-off move. That's asset allocation. People are sitting in cash because you're earning 5.375%. It's not what it used to be, where you're sitting in cash because you're worried about some big event that's going to happen. So I do think we have to think about that as asset allocation and then think about, okay, what are some risk events that might need to get out of the way before people feel good about investing? One is certainly the Fed. What we hear from clients is people love fixed income, waiting to invest, but waiting for Fed to get out of the way. Well, when and if that happens, there's going to be that cash, but I think that's worthy. That makes sense. Similarly, election is a concern, and obviously we can see some volatility going into October. I think once we're done with that event risk, whenever that happens, we can see investors moving out of cash. Again, we think to high-quality equities.
I'm so pleased you said that. There's a massive difference between T-bills and chill and T-bills and tin hats. Like, this is T-bills and chills. It might be T-bills and tin hats later on this year. I've got no idea, but that's not where we are at the moment.
I love it. It's an asset allocation choice, and it doesn't look like a terrible choice when it's 5.5%. And you just get fund manager after fund manager trying to argue against that, but saying, like...
Reinvestment risk.
I kind of get it, though.
Reinvestment risk.
It's getting harder to make that argument.
And then every time the Fed meets, they just sort of drop the dots a little bit more and push out the rate cut call. It's getting difficult to convince people.
Yeah, although I wonder what happens when that flood of cash happens. I mean, again... How much could yields possibly go down? Are we looking at a 0.5 percentage point decline in one day? I mean, just think about who's going to even let go of their bonds to sell them at that moment, given the sort of rush into fixed income.
So here's the important piece of that. So it's T-bills and chill now, right? Because you get yield. T-bills and tin hats is a very, very different story. You could accept even less yield at the front end of the yield curve and still be in cash because you're worried about what's happening elsewhere.
Yeah.
That's why it's a really difficult call to make. A rate's coming down because things are scary. A rate's coming down because we've got disinflation, that immaculate disinflation story. Then that cash gets distributed elsewhere. It's a very different story.
Notice that no one's going to really try to work that out. They're just sort of saying, in the next 6 months, this is what's working. And it makes sense. I get it.
You just sort of extrapolate out where we've been in the last 5 minutes.
I mean, what else can you do?
6 to 12 months. I mean, that's kind of it. Equity futures right now recovering as Bramo speaks, which is rare. Equity futures positive by 0.2%. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. G7 leaders have agreed on a plan to tap frozen Russian assets to provide Ukraine with $50 billion of fresh aid, that according to people familiar. After months of discussion, the plan is set to win the backing of leaders at the summit in Italy this week. The structure of the loans would reportedly be based on the size of individual economies. The nations would then give loans to Ukraine and would be repaid using the profits generated by the roughly $280 billion of blocked funds, most of which are immobilized in Europe. Apple isn't paying OpenAI to use its chatbot. Apple believes that promoting ChatGPT to its users is of equal or greater value than monetary payments, according to people familiar. The iPhone maker revealed a partnership with OpenAI during its Worldwide Developers Conference this week. At the time, they said ChatGPT will be offered for free on Apple's products. Apple's deal with OpenAI isn't exclusive, and the company is already discussing offering Google's Gemini chatbot as an additional option. Manhattan rents slipped for the month of May. According to data from Miller Samuel and Douglas Elliman Real Estate, rents were down 3.33% year over year. The median rent coming in at $4,250 per month. New leases, though, were up 41% from a year earlier, but helping to keep prices down, inventories also climbed about 28%. And that's your Bloomberg Brief. John.
Danny, thank you. $4,250 is still just ridiculous. I know we said that already this morning, but $4,250 median rent in Manhattan.
Yes. Well, I mean, honestly, this is what you're looking at. The fact that that's actually a step down from what it's been gives you a sense of just how far we've come.
Yeah, and as we said earlier, that's kind of the division right now between policymakers at the Federal Reserve. In the White House, who are talking about inflation stabilizing and coming down, things are getting better, and everyone's looking around and saying, yeah, it's still expensive. Yeah. Still $4,250.
Well, that's the thing. I mean, when people strip out healthcare costs, they strip out home improvement, and they strip out what you pay at the grocery store, and they strip out what you pay for your kids' education. It's like, you know, everything else you're doing great.
Up next on this program, the morning calls and Bloomberg's Craig Trudell on Tesla CEO Elon Musk's record pay package, and a special thanks to Gargi, because Gargi, I don't think I squeezed that in. It's good to see you. Thank you. Tesla up by 6.5%. You're opening about 1 hour and 15 minutes away.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
The opening bell 1 hour and 12 minutes away. Equity futures positive by 0.2%, looking to add some weight to that record-breaking rally over the last 3 days or so. Let's get you some morning calls. First up, Deutsche Bank resuming coverage of Nike with a buy rating at 115 price target. The analyst saying the company is ramping up innovation ahead of the Paris Olympics and can gain back shelf space. That stock is just about unchanged in the pre-market. Next up, Barclays boosting its price target on Broadcom to 2K. The analyst keeping an overweight rating, saying it remains one of the best ways to play AI. That stock is up 14% in the pre-market. And finally, Wedbush maintaining an outperform rating and 275 price target on Tesla. Analyst Dan Ives saying the shareholder approval of Elon Musk's pay package and move to Texas removes a $20 to $25 overhang on the stock. We're positive in the pre-market by 6.5%. Joining us on that story is Bloomberg's Craig Trudell. Craig, big day for the likes of Elon Musk and Tesla shareholders. What are we likely to hear a little bit later?
Yeah, based on a late-night Musk X post, we're going to get good news on the fronts that you just referred to. The most important one, really, for shareholders has to do specifically with Musk's pay package, which was arranged in 2018. He hit all of these, sort of moonshot achievements that, the payout was incumbent upon him, hitting those goals in order to get the stock options lined up for him. The issue, of course, was that in January, this got thrown out by a judge in Delaware. And so this is an effort to kind of bolster the case for undoing that ruling or challenging it in the courts. It does not mean that, after today, Musk, goes home from this meeting with his stock options. But it is, a shot in the arm for him and potentially for the board as they, fight this and take that fight to Delaware.
Dan Ives mentioned that overhang on the stock. He said it's been a $20 to $25 overhang on the name. Lisa asked this question earlier this morning, Craig, and I think it's the important one to ask. This feels like this morning, as you were, if the votes go his way. What would have changed if he'd lost this vote?
Yeah, I mean, I don't know how you possibly put a price or a dollar amount to just how much this was keeping the stock down. And I think, some other analysts who have opined on this really sort of, describe it more so as avoiding what would have been a really dramatic drop had the vote gone the other way. And that makes more sense to me, right? Because Musk, if he leaves the picture, this is not, remotely a stock worth as much as it is now. I think the fundamentals of the company, absolutely, have been going in the wrong direction. And that has also gotten lost in all of this attention on whether or not Musk is going to stay or go, and his sort of threats to, take AI elsewhere unless he gets 25% control of the company.
Craig, the market's trying to quantify how much the chance of him not getting that $56 billion bonus was. It's about 6.6%. That's at least where we are pre-market in the stock trading for Tesla shares. I am curious, though, to that point of where his focus is. How much does this mean that Elon Musk is going to take the chips from X or some of the other companies and try to find a spot for them in the actual Tesla vehicles, which is essentially the great hope of a lot of these bets in this company?
Yeah, I think it's interesting. Tesla IR spent some time recently with JP Morgan, which just put out a report yesterday, sort of trying to address some of these very questions of just what to make of those threats. And there was an attempt on the part of Tesla IR to kind of separate, XAI, the company that is closely tied to X, is working on, stuff more so like chatbots, whereas with Tesla, this is, quote unquote, real world AI of trying to get, cars that are out on the road to a point where they're able to drive themselves, and really trying to kind of, separate those two. But the fact that he's, devoting time and attention to standing up yet another company over the last, year or so, after already, kind of taking his eye off the ball and acquiring Twitter, and, the effect that had on the company and the stock, this is precisely, what leads to some shareholders saying, this pay package didn't work. It didn't ensure that we had his attention. And that was already an issue before he went out and bought Twitter and built up XAI. But it's only been exacerbated as a result of those moves.
Craig, a lot of people might argue it's sort of a distraction that Elon Musk is here fighting whether he can still get his $56 billion pay package. I'm a little surprised he's not in Puglia, in Italy, talking to some of the leaders down there who are talking about potentially putting tariffs on his vehicles that are made in China. At what point does he need to get on a plane and get over there to try to figure out how to get a couple carve-outs to make sure that he's not penalized in tandem with some of the Chinese auto manufacturers?
Well, there's good news on that front in that Tesla was the lone manufacturer called out yesterday when the European Commission announced those tariffs as potentially, being able to be assigned a different tariff rate than other companies. And, it required quite a bit of paperwork, we're told, to try and, make the case to the Commission that they were, that they received less state support than some of these other companies. And, the way in which the Commission arrived at these rates was based on the level of subsidization. So they need to make the case to the EU that, hey, we haven't made, as much off of subsidies as, say, a BYD or an SAIC or a Geely, and therefore don't hit us with this, 21% rate that will come into play around July 4th. We should be subject to something lower than that, but that would not be relief that they would feel until later this year, around November.
Craig, just quickly, what did you make in the difference of approach from the Commission versus, say, the government here in Washington?
Definitely more surgical and based on more of a process. I don't necessarily get the sense that the tariff rate that the Biden administration has put on Chinese EVs, was a sort of scientific, calculation. It was essentially, let's take this as high as we can possibly go.
That's what it felt like. Craig, thank you, sir. Craig Trudeau of Bloomberg in London. Surgical in Europe. Sort of laborious process, as you might expect out of the Europeans. Lots of bureaucracy and paperwork. Got to apply for this, apply for that. And in America, just big hammer, just saying, nope, 100%.
Right. Basically, the U.S. saying, we don't want your electric vehicles. And Europe saying, kind of, maybe we do, but I don't know. We just want to make sure that our companies can deal with it. And, we'll work with you, and let's take a look at what oversupply really means.
It's kind of bizarre when the headlines were coming out the last couple of days. Tesla, by the way, in the pre-market, as Lisa mentioned, up by 6.8%. Coming up next, PPI data and another round of jobless claims. The reaction from SocGen's Subhadra Rajappa and UBS's John Pingle. Looking forward to their reaction. And a little bit later, we'll catch up with Anne-Marie on what you can expect out of the G7 in Italy a little bit.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the...
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Seconds away from some economic data in America, 1 hour away from the opening bout. The scores look like this going into PPI and jobless claims. Equities on the S&P 500 positive by 0.25%. A lift on the Nasdaq, up by 0.75% on the Nasdaq 100. For a single mover, Tesla doing nicely in the pre-markets. It looks like the vote is going Elon Musk's way ahead of that meeting today. In the bond market, yields on a 2-year at the front end of the curve, aggressively lower yesterday, down again today by 2 basis points, 4.72. With some economic data, here's Mike McKee. Good morning, Mike.
Good morning. Well, for those thinking maybe just one cut this year, don't know. Initial jobless claims come in much higher. 242,000 after 229,000 last week. Unrevised. We'll check the revision on that. Continuing claims at 1,820,000. Those are up significantly from the 179.2 that we saw the week before. Now, PPI comes in down 0.2 on the month, and the core comes in flat, as does ex-food and energy trade. The extra core we get with PPI also flat, so that leaves us at 2.2%, same as last month for the final demand headline year over year. Now remember, PPI went up significantly last month, 0.5% during the month, so holding at 2.2 is good. 2.3 for core, down from 2.4, and 3.2 for the ex-food, energy, and trade. That's up from 3.1, so we get a little bit of, I guess, a base effect there. But what we're looking at is jobless claims going up, the labor market maybe weakening a little bit, and PPI going down, inflation going down. I think, you know, the obvious first question to your people around the table here is, are you going to change your Fed call again from yesterday? Since now things are meeting Jay Powell's criteria.
What I'd love to know, Mike, is if the FOMC had this data together with yesterday's data, how those forecasts might change. This data just a little bit more freezing cold water to throw over the dot plot we got just yesterday. Check out the price action. Equities positive off the back of this on the S&P 500, on the Nasdaq, on the small caps as well. We're up by 0.4% on the S&P, up by 0.9 on the Nasdaq. In the bond market, quite a move at the front end of the curve this time yesterday, following that downside surprise on CPI. Down another 7 basis points now, 467.80 on 2s. Call it 468 on a 10-year, back in the 420s, 425.58. Put it all together, Lisa. Downside surprise on CPI. Downside surprise on PPI, wrong kind of upside surprise on jobless claims, and the tone of that data, together with the tone of the outlook from the Federal Reserve, is even more difficult to reconcile.
It seems like the Fed certainly being more cautious than anything else at a time where the data certainly does seem to be shifting. If we do want to play narrative table tennis, as you put it, as others, James Athey put it, this is additional confirmation that the disinflationary trend is underway, and that the core PCE will, if you just grind it through the sort of data grinder, will come out lower, and that will give the Fed a chance to potentially cut. This, though, is the messiness of this. When you strip out food, when you strip out energy, when you strip out trade, the inflation actually creeped up on a year-over-year basis. So there are some real questions under the hood. That said, definitely some positive progress.
Mike McKee is going to stay around the table with us. Let's introduce Subhadra Jhampa of SocGen alongside Jonathan Pingle of UBS. So we have team no cuts in 24 alongside team December now, because we had a change over at UBS just yesterday. I want to come to SocGen first. Subhadra, let's talk about this data. What does this data tell you? And put it together with what you heard from the Federal Reserve Chairman yesterday and sort of square that circle for us.
This is, of course, one data point.
the fact that the claims number went up is something to keep an eye on, because typically when you tend to see a deterioration in the employment picture, you tend to see that led by initial jobless claims. It tends to be a leading indicator. But that said, again, one data point doesn't make a trend. We'll be looking to see what happens. What was interesting to me in yesterday's summary of economic projections is the fact that the Fed kept core PCE at 2.8% for this year. So they're expecting about roughly 0.2 increases month over month for the remainder of the year in core PCE. So in that sort of context where inflation is still relatively sticky and the job market is quite strong and growth is in the context of 2 to 2.5%, I don't see any need for the Fed to rush in to cut rates.
I want to couple your inflation outlook with their outlook for unemployment. They see it staying exactly where it is right now, 4%, year-end 2024. Jonathan, how are you thinking about the incoming information stacked up against what they're projecting for the rest of this year?
Well, that was actually a big reason we went from Team September to Team December. I mean, we were actually forecasting an increase in initial jobless claims today to 235. We were expecting an increase in continuing claims, and we were expecting a downside surprise on PPI, and we were actually one of the few shops expecting a 0.2 on core CPI yesterday. We have been watching the data slow and think there's a slowdown underway, but we got an FOMC that really just seems to think growth's fine, and not just fine, but great. I mean, they didn't even mark down their assessments of the pace of the expansion in the first paragraph of their statement, which is typically where an FOMC would acknowledge some moderation. But they seem extremely comfortable with the current stance of policy. They feel like, the labor market is still healthy. I mean, I will agree that is one place where if it does roll over rather quickly, they might respond. But it really looked to us like an FOMC that seems very comfortable waiting and without a lot of urgency to start dialing back restrictiveness.
Subhadra is sitting here thinking, all right, everybody just keep coming to my way, because I've been saying this for quite a while, or no cuts at all this year. Are we asking the wrong question? Are we basically asking when are they going to start the rate cutting cycle, and not what the rate cutting cycle is going to look like if they wait longer? In other words, if they do not cut this year, Subhadra, are they going to have to cut much more deeply next year in the face of that weakness that Jonathan was talking about and a lot of people are projecting?
I think I would prefer that than being in the situation that the ECB is in, where they've said they cut rates, and then now it's uncertain if they're going to cut in July. It doesn't look likely that they might cut in September. But then after that, they're looking at unit labor costs going up. They're looking at other factors that's going to keep them on hold. I don't see the need for the Fed to cut. I don't see the need for any sort of insurance cuts. Why should they cut and then wait for 6 months to deliver the next cut? Why not just wait for the data to corroborate a need for cuts and then go on some sort of a methodical fashion, or maybe once a meeting or once a quarter when, to ease policy? I just don't see kind of the rush for that first rate cut.
Jonathan, would you agree with that? Are you sympathetic to the view that some have espoused, including Neil Dutta over at Renmac, talking about how this is a rapidly weakening economy, and if the Fed doesn't get ahead of it, that the declines are going to be harder to counter in the future?
I mean, if I were a monetary policymaker, I would probably thinking about some calibration might be needed to ward off worst case outcomes. I think one of the problems is that we're seeing slowing in growth, but we're not really seeing such severe slowing that monetary policymakers seem like they really need to act urgently. But, we have that. That's our expectation, is that growth is going to slow. It's going to take the FOMC time to digest. But next year, they're probably going to want to pick up the pace a little bit, right? I mean, so we have them after they see payroll slow, after they see GDP growth slow, we've got a little bit lower inflation forecast than they do, that they're going to start to feel like, look, maybe policy really is restrictive, something they've been debating a little bit. Maybe we need to get out of this restrictive stance of policy a little bit more quickly than we expect. So we expect them to have the same terminal rate that they have in the SEP, but get there a lot faster next year and into 2026 than their current projections.
John, I don't want this to turn into a therapy session for Wall Street, but I just imagine it must be incredibly frustrating for you to have absolutely nailed the data of the last 24 hours and then been surprised with the way they've responded to it. What are you struggling with right now? Their reaction function, or just the way they're seeing the data that you've been forecasting? What is it?
I've been a little surprised at their sort of lack of acknowledgement over the degree of cooling, I think, that's underway. I mean, non-farm payroll employment looks good, is certainly a headline, and they've sort of walked away with that as sort of a summary statistic for the strength. But even if we look at non-farm payroll employment, I mean, private employment over the last 12 months has slowed to sort of 178.
Can I jump in? You say they walk away with that. And I walked away from the news conference yesterday and I heard Chairman Powell say something like maybe 272 overstates the strength of the labour market. I just wonder who they is on the committee right now. I find it really confusing. 272 for some seems like it's the real deal, hence the dot plot. It's another part of the dot plot that feels like they're in Camp Powell. Maybe it overstates strength. When you say things like they, who are we even talking about in the committee anymore?
I would actually, in terms of this narrative, I'd lump in the vast majority of participants. I think when I hear Governor Waller talk about the strength, think about Philip Jefferson's speech before the quiet period, talking about the strength in private domestic final purchases. I mean, they're all pulling out relatively strong components and cuts of the data at the moment, and I feel like you got an element of that in Chair Powell. Even though he might acknowledge that the 272 was overstating, he's not acting as though it's 190.
Mike, what was your take?
I think that at this point, they don't know what they're doing. And so they're going to be honest about that. The difference between Subhadra and John is that you guys have a forecast, and you make a forecast, and they have 19 forecasts. And we, for our convenience, pick out a median and say that's their forecast. It's not their forecast. There's 19 different forecasts, and the range is pretty wide. And especially if you look at 2025, the range is very wide. There's a plurality in the middle, but they don't know what's going to be happening by then. So, and another quarter from now, in September, they'll change their forecasts and their dot plot again, and we'll all recalibrate. I think basically they're in a sort of hold mode, risk management mode, I guess, at this point. We'll see where inflation goes, and we can move, but we don't have to.
John, you didn't want a therapy session. I think that actually
We're about to get one.
A lot of people are looking for a therapy session because there was a lot of uncertainty, and it's been a very challenging year. So, Subhadra, I'm curious how you come up with a projection of there is enough strength. We don't need those sort of cuts to sort of be cosmetic or get ahead of that weakness. What gives you conviction in that? What's your guiding compass at a time of such great uncertainty?
You can listen to the Fed. For instance, when you listen to John Williams from the New York Fed president, what he said was his expectation is for growth in the context of 2 to 2.5%. He's expecting the unemployment rate to be around 4%. And he's expecting core PCE above or at or above 2.5%. So even from what they're saying, just from their own forecast and the summary of economic projections, leave alone our forecasts and our expectations, there's no clear indication that they're going to need to rush into cuts. That's why I think that, in addition to our own forecast from our economists, what we're hearing from the Fed is also consistent with the Fed that needs to be on hold for the remainder of the year.
Honestly, I got to say, John, one thing that people, Jonathan Pingle, one thing that people keep saying is all of this out there, it sounds bad, it's hard to gauge, whatever, but, NVIDIA is going to change the world. We're going to have all these technological advancements. We're going to have fiscal impulses that come down the pike. How do you factor in sort of the nebulous concepts that have driven this market this year, as opposed to sort of overarching macro top-down views?
So we could get an NVIDIA boost. I would say if that really was a productivity boost, we would see lower inflation, and the Fed should probably have lower rates as well. And the fiscal policy obviously has been huge. I mean, it's really done a lot to insulate the economy from the rate hikes and the rapid rate hiking cycle of Fed. And that is an impulse that's fading right now, and we're going to head into 2025 with a year Congress is probably going to spend having to rewrite a substantial amount of the tax code to avoid the fiscal drag at the end of the year. So these are all meaningful influences. I mean, we all just have to sort of do our best, look at the details, aggregate up. But I mean, I would sort of echo this point. It's not necessarily that we can debate how we're thinking about our growth forecast, but if we take the wide swath of FOMC participants, they just don't seem to be internalizing any trade-off between growth and the level of interest rates right now. And that just seems to be a group that is willing to wait. And the other reason we pushed out our call is just, when they get into September, if they're still not facing a trade-off with weaker growth, I think the arguments will carry the day to wait longer.
I have to wonder, Subhadra, August 22nd, August 23rd, I think it's August 23rd that Jay Powell is going to be in the Tetons and he's going to be talking to people, giving a message. At one point, it was a very clear message. Pain. It's all going to be pain. We need to get this under control. What's it going to be this year?
I think it's staying the course. I think it's caution. For the most part, the Fed is going to strike a cautious tone. In my view, at least, I felt like they pivoted too soon towards rate cuts late last year, and I think that they're going to take a much more cautious tone and wait for the data to guide them on policy. So our expectation is that they'll start cutting sometime in the first quarter of next year, and then deliver a steady set of cuts for the remainder of the year. But then the terminal Fed funds rate is probably going to be higher. We think that the R-star is also higher, and you're seeing that in the market pricing for both the Fed as well as for the 10-year yield, which is higher for longer. So the market is ever so slowly calibrating to a much higher R-star. And so I think that the Fed is going to be somewhat cautious. This feels like a little bit of a paradigm shift, if you will, from the period after the great financial crisis, when we were bringing down the R-star ever so gradually. Now we're going to go the other way and start recalibrating R-star.
Welcome, traders. Hi, Clifton. Hi, Scott.
At the moment, that's for sure.
Hi,
A special
Steve.
thanks to Team
Nice to see you. Trade Tricks. Nice to see you. How are you?
And Jonathan Finkel. Thank you.
Hey,
Just want to summarize some of the
guidance
dates we got
room.
about 15
Nice to
minutes
see
ago. Mike McKee,
everyone.
what's your take on
John,
things?
Jules,
PPI, jobless
Lorraine.
claims.
PPI also
Roger,
surprises
Romanas,
the same
SP,
way
Tara.
that CPI
Tara, I
did
hope you're
yesterday, comes
feeling
in much
better
lower,
now.
although it's mostly goods, and within that category, it's mostly energy. So there are a lot of declines in prices at the factory gate, but it is the big surprise.
Hi, Scott. Good morning.
How bad energy fell.
Okay,
jobless claims,
traders.
a surprise
Let's just start
because
the
they
screen
haven't
share
been
in the
going
meantime.
up. Now they did. We'll see if this is more of a one-off, but if it starts a trend or we get into a new trend level, then the Fed has something to talk
Getting
about.
there.
We've had a
Good.
few more head fakes
Very good,
on
Tara.
that particular print, jobless claims, over the last
You
few
know,
months. So we'll
lots
see
of
if this one is
rest,
a head fake or not. This from
tea,
Renaissance Macro just moments
honey,
ago. The growth and inflation
ginger,
trade-offs
lemon,
the Fed are
everything
shifting.
like that.
It's getting close to time
And you
to
are going to be
recalibrate
better soon.
policy. I imagine we'll hear that a few times
Okay,
a little bit
guys.
later today.
Neil, I
Let's
hear you
see the
pounding the
screen
table.
share.
I hear
Hopefully
it
it's going
loud.
to
You
work
get it.
because
You're like,
yesterday
let's go,
it
let's
just
go, let's go.
messed
It's
up
interesting,
all
you know,
of
I'm
my
curious why people are
setup
not
and
on that
platform,
page.
so hopefully it's not going to do it
Why
today.
he is on that page.
Hi Lee,
considering
good
that it's
morning.
sort of unclear.
Yeah, I didn't
Another
hear Neil
big
Duff in
day
that
for
news
the market.
conference yesterday
No.
at all, that's for sure. Let's give you an update
Traders,
on stories elsewhere this
big
morning.
green,
Here's your
especially
Bloomberg
on the
brief
triple
with Danny
Q.
Berger. Hey, Danny.
Hey, John.
We will just
Tesla
talk
will
about
likely raise prices
soon
for its
why
flagship model, the
it's
Model 3
happening
in
again,
European
like
markets.
green
That
after
follows the
green
announcement
and
that the
green
EU could impose
and
tariffs
more
on
green
imports
and
of
actually
EVs
new
from
all-time
China,
high. Of
even from
course,
Western
what
automakers.
else for
Tesla
today?
manufacturing does have
So
a large
let's
presence
see
in China.
and let's
The
just
automaker delivered
start
over
to
90
speak about
900,000
yesterday
vehicles from
trading.
its
How was
Shanghai
your
factory
day,
last year.
traders? Green,
Tesla said the
red,
price
no
increases
trade.
will
Any
likely go into
question
effect on
regarding any of
July
the calls
1st,
from the
and the
room or
tariffs would
your
go into
calls,
effect
your
just a few
trading?
days later.
Please just let me know.
Donald Trump is
Here
back
is
in Washington, D.C. today.
our
The former
results.
president is
I mean,
meeting
the
with
guidance
some
room and the
leaders
main room.
of the
In the
country's
main room,
biggest
Scott just
companies,
caught
including
several
Jamie Dimon,
very good
Jane
trades,
Fraser,
especially
and Tim
Microsoft
Cook,
got
according to people familiar
times
with
up.
the
Beautiful
event.
winner,
During his one-day return
not
to the
even
Capitol,
mentioned,
Trump is
and
also set to meet
VDA.
with congressional
Of course, the
Republicans.
JP Morgan, which
And
was
Florida
thanks to
is
Kevin,
in
who
a
is one of
state of
the traders
emergency.
from the guidance
Heavy
room.
downpours
He
flooded
called it
Miami
JP
streets
Morgan,
and
and I
grounded
really liked
hundreds
it.
of
It was a
flights at
short.
the
I
Fort
just
Lauderdale International Airport yesterday.
mixed up
The state has already seen a
signs
record
there.
amount of rain for the
Of
month
course,
of June,
NVIDIA
and more is
Uber,
expected today.
and we had
Officials
the same
projecting that
Microsoft
damages will
as
top
well
$1
at
billion
the end. And
before
for the
rain
afternoon,
stops.
which
That's
I
your
was
brief,
so
John.
much
Danny, thank
expected,
you.
because
Thanks for this
as you
morning.
know,
Up
it
next
was
on the
a
programme,
federal
setting you
funds
up
rate
for the day
decision,
ahead.
and
Going
the
into the
Fed
weekend,
just
we'll
stayed
catch up with Anne Marie
steady
from a beautiful
with
Italy,
the
New York.
rate.
This is Bloomberg.
But actually, it was a very much non-even for the market. Not too much reaction from the market. I could manage like 30-40 cents from this TQQQ, but that's it. And I told the guys in the room that, okay, you know what? As soon as he finished, market is going to start tanking. And I did not flip the coin, unfortunately. So I was not participating in the short in the TQQQ after that. But actually, after Powell finished, after let's call it like rinse and repeat Q&As and speech. It's nothing new. Slightly, just a little bit slightly dovish, because at least we know that there will be a rate cut for the year, but highly likely only one. And he just predicted, well, everything was just rinse and repeat again. We just gathered the 5 words which it's always repeated during these speeches and events, which is like a data-dependent labor market, consumers, CPI, what else? I forgot, but we really gathered or collected these words, which are very much referring to these speeches and
the
time. So actually, not a huge move during the Q&As. I mean the press conference, because actually what his speech only took like 4 or 5 minutes. So the rest of the 40 or 50 minutes it was about Q&As. But actually Q&As, they cannot take any different Q&As than from the last one. Until we won't see at least one rate cut, I think it's just going to be rinse and repeat, rinse and repeat. That's it. And of course everything is data dependent. Hi Nikita, nice to see you. Okay, now let's see how was your day yesterday? Roger, 1 trade green, 1.5, very good. Lee green, 3.5, and then VDA and coin. Very good. Yes, me neither. This is my second day traders. Yesterday was the second day without any loser. Really so great when you have. Anyway, it's great to finish the day in green, but it's an extra great feeling when you did not have any loser. Okay, guys, now let's see. And the market in the meantime, it just went up a lot. 544, but there is a sudden pullback, so I don't know what's going to happen with the S&P 500. Typically it's stronger. Tesla, I see it's a big mover. Today was a big day for the Tesla. And later. And why the market is going up at the moment? Oh, Nikita Green, finally, very good. Could you use the setups which I sent you? Hope so.
Joining us now before that weekend is AMH
you can just
change this in the south of Italy. Anne-Marie, set us up
the
for the
winning
next 12 hours or
so.
so.
Now,
What are you
10
expecting
green
to hear?
days coming. Okay, hopefully.
Well,
very
really
good.
important is going to be Biden's press
Okay,
conference
guys.
alongside
Now
Volodymyr
let's see
Zelensky.
the
President Biden is
news.
really going
Why
to
we
want
see
to
this
tout
or
the fact that
have
the Biden
seen so far this nice
able to get over the finish line. Really what has been
pre-market
their
pump. So of course
brainchild
again
for the past
inflation
few months.
numbers.
This was the idea of tapping into
Good. If
the
you have any
future
questions, please just
appreciation, that net
write
interest
me.
that these foreign
Hi Mark,
frozen
good morning
and
to
mobilized
you.
Russian
How was
assets
your day
can potentially
yesterday? I
accrue.
hope
So
in
this
green.
is a big win for the Biden administration.
Okay.
He's also going to
So
sign
back to the pump on
with
the market.
Zelensky
It's just
a
happened
bilateral
because of
security
PPI numbers.
pact.
Okay, so PPI numbers, as you can see, it's out and much lower than expected. Like CPI numbers, they were lower than expected as well. But looks like this PPI is even lower now. And at the same time, the unemployment claims increased, which, as you know, it's really good.
And I think really what this is going to be about is basically saying, sign up for what the West wants to do,
for
not
the
potentially what China
from the
wants to
Fed's
do.
point
And
of
then,
view,
John, a
it's
little bit more
better news for
lighthearted.
the market.
Potentially the
So it
fanfare,
was a
though,
very
won't be light.
interesting,
I'm
one very
interested to
interesting
see, although
question,
Biden
not
is
just
skipping
one,
tonight's dinner with
several
G7
great
leaders. I'm
questions.
interested to see what Maloney decides to put on the menu, but he will be at tomorrow's G7
by the
leaders
journalist,
dinner.
by the way. And there was one particular great question regarding the labor market, because now, and I got this question here in the room before as well. Why do they want to see higher unemployment? Because usually, you know, if it's going faster and it's going to reach a limit, then it means it can turn into a kind of a recession. And this is definitely a very fragile thing. And this is a question was taken by a journalist to Powell that don't they afraid of seeing that in the future, that okay, that now they
Maloney
wait
moving towards
for
them. And I think
the
what you
labor
see is
market
that
for
Europe is definitely moving
more
more
cool
towards
down,
Maloney.
you know,
As
like
John
more
said earlier this week,
much
this
higher
G7 is Maloney's
unemployment rate
G7
and
in
so
so
on.
many ways, because you have a number of
But he
leaders
thought
coming
that
here
no, they
as
are
lame
aware of
ducks
it,
that
and
do not
definitely they
have
are
the
not going
backing
to
at the moment
let
of their electorate,
things
and
go
potentially,
there.
in as soon as 3 weeks,
Hopefully,
maybe out of a job.
Hopefully,
It's a
if we
great
can
headline on
believe
Politico
them,
today. Six lame
then
ducks and
hopefully
Giorgia
it's not going
Meloni
to
meet the
happen.
G7
Okay.
class of 2024.
You are very welcome,
Rings
Nikita.
true. Anne-Marie,
Nah,
let's have some fun.
that's it.
Let's talk about the
So
menu.
that's it
I was at a
about
Macron
the
event a
labor
couple of months
market
ago.
news. Much high, as you can see, even much higher, because 229 was the previous data, and now it's 242,000. So it's like 13,000 higher than the previous unemployment claims. I mean, from the previous week, and there is more to come, not even data, I mean no numbers, but there will be a Treasury Sec Yellen speech at 12, so just in the middle of the lunchtime, plus FOMC member Williams speaks, and after that at 1 p.m. 30-year bond auction. I think all of these events can move the market, so please let's be careful. Regarding the lunchtime and the schedule for the day, as you heard Michael yesterday in the lunchtime, he's going to be out for today and tomorrow. He's on a mini holiday. Next week, I'm going to be on a mini holiday, so this is holiday time already in the room, but of course, me and Scott, we are going to cover Michael's spot here. So Scott is going to stay with you until 1 p.m. and then I'm just going to take over the room until the close. Okay, guys, so this is the news which has been released already, and we are still waiting for Sec Yellen, Treasury Sec Yellen speech, Williams speech, and a 30-year bonds auction. And now let's just continue to look at the news. First of all, but before that, definitely let's just take a look at the pre-market. How does it look like? This quite of a quick or fast dump on the market after reaching new all-time high. It's quite interesting on the market. So actually, I don't know whether the market still can be pumped higher or not. At the moment, looks like yes, indeed. But I'm going to be careful. Why? You will just see it now, especially the daily chart on the SPY, which I want to zoom out a little bit, and you can see that there is an enormous increase on that SPY since the 11th of 2023. As you can see, only one kind of we can call it like a serious, I would not call it serious, but a bigger pullback happened in April, as you know. But since then, we are just stretching higher. And as you know, it was yesterday, it was a gap. And seems like today as well, we are going to start maybe with a gap indeed. But just from the close of the day, not the body of the candle. It's going to be a kind of rather an inside day indeed for today. Depends on the strength and the euphoria and the optimism of the market, whether it can push higher, even for new highs and towards to this 550 level now, or there will be a small pullback, like let's call it profit taking. Seems like the market is in very much euphoric state at the moment and doesn't seem like it wants to slow down. Triple Q is the same. Triple Q is the same. It's even crazy, more crazy reason for that. It's the Apple 2 days big run, as you know, and now it's just getting close to this 480 level. I think 500, it's easier, can be touched, not today, but in the coming weeks, if no bad news or nothing from the geopolitical side is going to disturb this big bull run. So all in all, it looks like a really, really, really strong market so far, and seems like it's going to continue. But as I've told you, we are getting really extended now over both territory for sure. But as you know, until the sentiment is strong, it can go even higher. So don't look for the top yet, I would say. Okay, traders, now let's see the news. And of course, if you have any questions, please just take it in or type it in the chat. All right, market watch headlines: higher return than NVIDIA's buy. Okay, NVIDIA, that's interesting. I thought PPI is going to be in the headlines, but not yet. I mean, not anymore. Jobless claims it's here, a jump, a highest level in 10 months. Okay, hopefully it's still not going to cause any problem. GameStop shares rally ahead of annual shareholder meeting. Yeah, I've seen GameStop, it was up 4-5% again. Broadcom news out, AVGO very strong, and it's going to follow the steps of NVIDIA regarding the split. So Broadcom is planning a split as well. So my today is going to be even more crazy and another push higher. Moderna news again, as I've seen on the geopolitical side or level. I've just read some concerning news about the Gulf of Aden. Unfortunately, because the Yemen Saudi rebels believed to be behind missile strike on a ship in Gulf of Aden. So this is not a good news. As you know, this is still ongoing. So this can cause a little problem for the whole world economy as well. Not even to talk about the people there and everything like that. But I'm going to follow it in the coming weeks for sure. Okay, Broadcom, as I've told you, M news to transfer pension payment obligations for 23,000 US retirees. So M, we can get it on our agenda as well for today. MicroStrategy plans more convertible debt sales so it can buy more Bitcoin. MSTR, it's a very much Bitcoin related stock, as you know. Oil prices though fall, dosed by rise in crude gasoline stocks. So seems like that the the futures green, of course, but the oil is almost touched 80. Now it's back $78 at the moment. And surprisingly, the Dow is not that happy, and the triple Q, because the Dow futures at the moment, it's red, traders. It's really red. The 10 years, of course, after the PPI news, just like yesterday after the CPI news started to decrease together with the DXY index, which is under $105 area now. Asia, finally a green day for the Hang Seng, which means that this red stripe for the Asian stock market, it's just stopped. Nikkei, though, it's in the red side, 0.40. European stocks, all of them into the red indeed. So let's see more news here. Treasury yields have entered the soft landing zone and regional banks are positioned to benefit. Okay, let's see if it's going to continue at all. GameStop, Virgin Galactic, but it's a very low price stock now. It's going to get a split, but a forward split. Elon Musk in the news. Why I've told you that Tesla it's up so much, because as you know, this is the day for Elon, and he will get more information about whether he's going to get paid with this not a big sum, guys. It's just $56 billion. Amazing. This pay package, as you know, this is still on the table by the Tesla. And so far, Musk claims Tesla shareholders have bagged his $56 billion pay package. And actually, not only this news just driving the Tesla crazy price action today in pre-market, but another news regarding the Model 3 prices in Europe, because they want to raise the price. Indeed. So Tesla expects to raise price of Model 3 in EU as bloc preps import duties on cars made in China. Okay, so this is the two news which are driving the Tesla prices crazy indeed. Apple, well, Apple just made two extremely big green days with huge volume indeed. Yesterday, though, especially after Powell stopped speaking, we could see quite of a intense drop on the stock price, and seems like today, though, it's back 3% again, or 3%, sorry. Today it's back 0.40%, I mean to the green side, but I'm still concerned that maybe the steam is just, it's just lost. This is a news as well on the market watch. Apple stock loses steam as company fails to finish worse more than Microsoft. So this is the reason for that. Let's see. I'm going to be cautious with the Apple today. On the international news, let's just see what's happening now. Elon again, Tesla popped 6% in pre-market after Musk says he is set for victory in 56 billion pay vote. Okay, European stocks fell as markets assess US outlook and autos down 2.5%. Oil prices, as we were talking about. Really about this yesterday Fed event, not too much to talk. As I've told you, it was a rinse and repeat just for the newcomers. And here is a Fed recap, like Chair Powell explains why the central bank is not ready yet to cut rates. It's just the same as he explained 1 month ago. So nothing new under the sun. US consumer prices are changed in May and up 3.3 from 1 year ago. It's yesterday. And nothing else indeed. All right, traders, let's see the big movers. We have some, starting with Tesla again. So let's see this Tesla. I think Tesla can be a quite of a roller coaster mode today, so be careful. Nice and strong. Finally with the Tesla, we did break this this 180 level, even 190, as you can see in the pre-market. So it seems like a very strong mover. Based on the daily, it still have a room to go until this 197 area, where is the 200 EMA, by the way. So let's see whether it can go there. Thank you, DVG. Good morning to you as well. Tesla, definitely. I'm just talking about the Tesla. And in the meantime, Scott just posted his list as well with NVIDIA, Tesla, AVG, or Microsoft, GME, and KMB. Play OXM and NEP to the short side. Amazon, Coin, CRM. Oh, yes, you're right. CRM, CRWD, Meta, and might still FSLR is going to be on my watch list because FSLR just touched 305 yesterday, something like that. So we should watch it as well. Now let's just go back to Tesla. As I've told you, it's about Musk pay package of $56 billion. Okay, boss pass a shareholder vote. The former garnered securities is heading into the vote with notable shareholders publicly sharing their intentions to vote against the compensation plan. So seems like Tesla, it's getting it as a good news. Broadcom shares jumped 14% after the chipmaker posted an earnings and revenue beat and announced a 10-for-1 stock split, just like NVIDIA. So seems like Broadcom AVGO is going to be a huge mover today as well. Yesterday, unfortunately, I missed a beautiful reversal on that. I'm going to watch it definitely today as well. Also, it's up a lot indeed, so I'm going to be careful. Pfizer, checking. First of all, I'm just going to go to the long list with AVGO and Tesla and checking Pfizer. Pfizer, at the moment, as I see, it's in a small, not that small, quite of a ugly move down indeed, which means that maybe it can be continued, I think. Might it can continue lower on this Pfizer. Looks like as a great short candidate. The only thing which I don't like too much on the Pfizer is the fact that this is not a big mover, Lee. However, seems like it's down 0.65%, not that much, but you're right, based on the daily, it looks like as a possible great short candidate at the moment. Okay, I'm just going to call it to the secondary list. So we have short and secondary, which includes the stocks which can be a good mover, but no news on that, nothing else like this. Dave & Buster's is the next one. Shares of an entertainment and restaurant chain fell 10%. Ouch. This is Play, by the way. After first quarter sales missed the expectations. Ouch. That's not a good news for Play for sure. And we can play display to the short side. Also, let me just check the volume on that stock because I am not sure that this is a high volume. No, not bad volume, 58,000. It's under $46, 46.31, which is the lowest point of this consolidation, we can call it. So I want to see that to break it again, but I agree completely with Scott that this play can go to our shortlist. You are welcome, Lee. Okay, traders. Next one, Oxford Industries, which is OXM, 4% lower. This is a clothing maker which got a weaker than expected earnings report. This is not good. So it seems like OXM, it's another possible short candidate. Let me just check the volume. Volume is quite low, but this is such a big mover, guys. I don't know. It's just an 8,000 in the pre-market, and actually even the average volume is not that good at all. Sorry. I'm going to move it just to the secondary list because of that. Next one, Virgin Galactic. No, let's just leave it. 1 to 20 reverse stock split. Oh my goodness, how cheap is that stock? Oh, it's under $1. Let's just leave it. Okay. Kimberly Clark, KMB. Next one. Consumer package goods stock advanced 2.2 on the heels of a rare double upgrade from Bank of America, Bank of America, which is great indeed. So KMB, we can just put it to the long side if we have enough volume. Not enough volume, unfortunately, but here the average volume is better. Let's just try KMB to the long side. And the last one is, or no, we have two more. Nextra is the next one, and EP, which is down again because of a nasty downgrade of the Barclays. Barclays said the company has no way to get out from under the overhangs caused by convertible equity portfolio financing. Not a good news for a company for sure. So this NEP, which is on Scott's list as well, seems like as a very good candidate to the short side. I love it. So I'm going to put it to the short side as well. Yes, DVG. PPI was light. Only thing that might be worth evaluating is consumer discretionary categories. Considering there are more unemployed people on jobs report. Exactly, but now, as you know, and as probably who you heard, we were, listening together to Powell yesterday, and he still called this labor market. I mean, now it's not overheated anymore. Like it's nicely cooling down. But they are still expecting a little bit more cool down, and that's why I think the market was happy about that. This is what bulls wanted to see to drive anchors. Yeah, exactly. Well, let's see though, because as I've told you, I'm a bit surprised how fast this pump on the market was killed after the 8:30 news. So the bulls should really show the strength today in order to see a continuation, the market to the highest levels again. Okay, guys, Corning is the last one. GLW, 1% down. Morgan Stanley downgrade on the GLNW. This is down at the moment 1.89%. Volume is not the best, but I love the daily. This is extended to the upside. This is a good sign for me with the bad news on the stock. So GLW can go to my short list. All right, traders, if you still have anything on the radar, please just let me know. I'm just going to give a quick check on the gainers and losers pre-market because I've seen some more here. UPST was a nice trade for me, not yesterday, day before. I'm going to watch UPST, Roblox for sure. So the lower price stocks, it's on my list. AFRM, which was a big misery yesterday again. Beautiful gap up, and then it gave back everything, but I'm going to watch it. What else? Roblox, as I've told you, 1.3% higher. I'm checking even AI. AI seemed like to be stronger yesterday. Also, it was a broader pullback after that. MU, ARM, SMCI, again, all of the semicon guys look like really strong. And I'm wondering whether this SMCI finally can break through this $800. So SMCI is going to be on my second list. NVDA is higher, much higher now. I think 130 is on the horizon. So I completely agree with Scott to put it to the long side. AMD should do something again because it's just a misery now. So I hope it's going to go higher. JP Morgan, I'm going to watch it on the secondary list because it was a huge red day yesterday for the JP Morgan. Roku and Snow are still on my watch list. Interesting daily charts just because of that. And let's see the big movers here. GME, I forgot GME. GME can be a possible reversal over 30. So I'm going to watch it to the long side. Hi, David. Good morning to you. Marvel, just checking. Mark, thank you. Marvel at the moment, it's, yeah, you are right. It's nice and strong. Looks very interesting for a continuation on the Marvel, but for that we would need the market as well for continuation. So I'm going to get Marvel to the long side. Let's see if it can continue even higher. Okay. Billy, SMCI, UPST, ARM, MBLY as well on the long side with 1.6% higher. It can be an easy recovery from here. Two big red days. QCOM looks like as a possible continuation as well, but it's on all-time highs. I'm just going to put it to my secondary list on the QCOM. Mentioned you FSLR, which is on a really big high. Yesterday it made a huge doji. Today it's slightly up only. So FSLR definitely on my watch list for today. But FSLR it's quite spready, so be careful with this stock. On the short side, I see MSTR, which is down 1.8% because of the news. Place here, but it's on our list already. Para, it's down not too much, so it does not matter too much. Jill, INC, it's down 16%. Ouch, that's a bit too much. NEP, it's on the list. STM, STM is down 2%, traders. That's weird. All of the semicons are strong, but STM is down 44. Looks like as a possible gap fill here. Okay. STM, I'm going to watch it. STM Microelectronics on the short side, actually. This seems like as a possible continuation. Hi, Seth. Good morning. Farah, nice to see you. Good morning to you as well. Okay. All right, traders, among the big tech stocks, I see Google very weak, and Google made a very ugly spinning top, touching 180 yesterday. Amazon is red as well, but Amazon daily, head and shoulders. Interesting. Microsoft was crazy yesterday, guys. So Microsoft, I see Scott called it already on the long side. Microsoft seems like unstoppable. So among the other tech stocks, I like Microsoft as well to the long side. Amazon, Google can be a bit shaky, so be careful there. And I think that's it. That's it from my side. Hi, Sal. Good morning. Here is my list to start the day. And as you know, I'm going to just go to the guidance room now to continue there until like 10:30 or maybe a little bit more. Depends on how many trades we have. Scott is going to lead you through the morning and part of the lunchtime, and I'm going to be back to you at 1 p.m. Good luck, everyone. Have a beautiful green morning and watch out with the market and just stay cautious because, again, new all-time high day, but a possible second big green day can be seen. Also, we need a huge push from the bulls for that to see. So good.
to the room, check it out, make a decision if it's right for you, okay? Again, monthly, quarterly, yearly membership right here into the private trading room. Should be a great day today. We got volatility. What, another day of NVDA up double digits. What are we at now? Started at, left off yesterday, 125.20. Now we're at 129. So it continues up to that 130 area today. We'll watch that stock and more as we get this day started. Going to be a great day today. And unfortunately, Michael's going to be gone today. I know many of you enjoy trading with Michael. He'll be out today and tomorrow. He'll be back on Monday. So I'll be taking you through the lunch hour today. I'll give myself about a 30-minute break here as we get into the lunch period. Take you through to 1 o'clock, and then Aggie will have the close today. All right, let's talk about the market, talk about where we are, talk about where we're going today. And again, forgive me for the voice, the coughing, and stuff like that. It just comes with the territory today. But you know what? We'll power through that, and we will get through together. All right, let's talk about these markets here. We'll talk about Asia in the overnight session. A mixed bag. Nikkei was down 156. Hong Kong Hang Seng up 175, and the Shanghai and China down 9. Europe still in session. They're red across the board. German DAX down 200. FTSE in UK down 28, and CAC 40 in Paris down 93. Combining that with Asia, you got 2 markets up, right? No, 1 market up, and that's the Hong Kong Hang Seng. 5 markets down, putting pressure to the downside here, but we're bucking the trend on the NASDAQ and the S&P, which are brand new, fresh highs. NASDAQ futures up 124.5, S&P futures up 12.25, and the Dow futures down 95. What's happening out there? Well, Tesla's in the news as you see it here. Popping 6% pre-market after Elon Musk. They're going to get this thing done for him. $56 billion pay, and then a move to Texas, I believe. So that's a good thing if you're in the Tesla suite here, so to speak. Wholesale prices come out and unexpectedly fall 0.2% in May. So again, that's good for the consumer, right? Not so great for the businesses. And then Janet Yellen says that the U.S. debt load is in a reasonable place if it remains at this level. If. So we'll have to see if that happens going forward into the year here. Thing you need to know about today is we're going to be up on the open on the NASDAQ, the tech-heavy NASDAQ, and down on the Dow this morning. If you're in the oil patch this morning, oil is down about 3 pennies, 78.47 per barrel. And then if you're in the gold patch this morning, you're down about $19.20, $23.35.60 per troy ounce. Silver is down almost 3%. Copper down, platinum down, palladium down as well. Okay, we are ready to rock and roll. Before we do that, let's say good morning to everybody here in the room, and let's get you ready to kick things off and get rolling this morning. I'll spare you the cough. How about that? Lee, good morning to you. DVG, good morning. David Orlando, good morning to you. Seth, good morning. Farah, good morning. Sal, good morning to you. Lorene, good morning. How can I move to the starters room with Aggie? Clifton will help you out if he has it already. Dror, good morning to you. Cullen, good morning. Yep. Sal, good morning to you. Scott V, good morning. Mark, yes, absolutely. Good morning to you. Ed, good morning. Nikita, good morning to you. Lee, what do you say? Good morning to you. All right. Let's get this thing in gear. Let's talk about some stocks this morning, get you all prepared for the day. Aggie's posted her trades. I've got mine here. First trade out of the gate is going to be a long on NVIDIA. That's going to be the 130 mark here. I think you got more to go. I don't know as if we'll see a pullback on a stock that's just so ready to rumble here. Even with the 10-to-1 split, stock is still really, really good. And then believe it or not, I've got a GME trade in here this morning, long over 27. See if that stock will move just a little bit. I know Roaring Kitty's in there, right? And then last but not least, Tesla this morning over 190. We're right there right now. TSLA long over 190. Now, the 2 other stocks I'm watching here play to the downside, and I think this is a pretty easy play, no pun intended, but 46.50, and I'm going to make this one red so you can easily tell that we're trying to short this here. This is a PLAY short this morning, 46.50. And see if this thing gets up and goes. I'm going to read you the news here in a moment. I think Aggie touched on it as well. And then we'll be watching NVDA, Microsoft this morning. Microsoft gets over that 441. That's viable. AVGO, a big dollar, high dollar stock, $1,700 per share. So we're just going to have to wait and watch. We've got good stocks picked out this morning. Let's go to Play, and I'm going to read to you about what's going on there on Play, just so you have an idea that when the stock starts to crumble today, you get a good idea of what's happening there. So let's see. Shares of the entertainment restaurant chain fell 10%. First quarter sales missed expectations. Dave & Buster's reported 588 million of revenue for the first quarter, below the 621 projected, according to analysts at LSEG. So again, not good news on Play. We'll be trying to short that. You could probably pick it up under the VWAP line. I really like that play. This is my favorite stock of the day on Play. There's no volume in the stock yet, but any spike up could be shorted in my opinion. Tesla on the pullback this morning. Lee, good morning to you. Tesla on the pullback this morning and the move over that VWAP line. Let's get a beat on this one more time here. That's going to be the 160, 189, 189 on Tesla. So we can come into that here at any time. We get started in less than 4 minutes now for the day. Going to be a great day. Listen, if you're wondering, if you're on social media listening to us this morning and you're saying, hey man, how can I get into the room? It's a simple path. Go to www.44trading.com. Don't worry about the guy coughing and everything. But head on over, check us out. We've got the monthly, quarterly, and yearly packages that you could join. So you're going to delete all my scans in the process. Okay, gotcha. Just learn about that. Roger, good morning. Phil on YouTube, good morning to you as well. Okay, we are good to go this morning. Looking forward to trading with everybody today. I'll be here, like I said, through the lunch hour here. I'll take you all the way through to the 1 o'clock time slot here. All right, let's see. Got the juice, that helps. Yes. Okay, super. We are ready to roll here this morning. Again, I'm going to be looking at that play stock for the short right out of the bat here. Morning, Daniel. How are you, my friend? Yep. Saad, good morning. Yep. Apple looks real good here this morning. I've got the Apple trade up here on my other screen. I'd say 215, maybe on the breakout. Let's put Apple where AVGO is here. AVGO just very expensive. I know a lot of people can't trade it. Okay, we'll put it there. That's a good call here. We'll put AVGO. I trade with a 4-monitor layout here. 2/2. All right, there we go. We'll watch Apple over that 217 this morning. I might as well post it because I will definitely take this stock. It's got nice momentum here. AAP, oops. AAPL, oops. Okay, type I'd be a genius, like I always say. There we go. AAPL long over 217. And that target's going to be just 50 cents on the trade, unless, of course, it starts to really go. Okay, with that, we are set to go. Should be a lot of fun today. I'm looking forward to trading with everybody, even though I'm not feeling great. Day trading is a better day than doing anything else, in my opinion. Okay, traders, just about a minute to come here. You know what? Let me 216 here. Sorry. And that's wrong too. It's 215. Let me go back here. There we go. Oops. There we go. Okay, 215. There it is. All right, traders, here we go. We've got about, 20 seconds before we open the market here on this Thursday. Let's be careful at the first couple of minutes. Morning, Jonathan. Okay, here we go. Here's the opening bell. Let's have a great day, traders. Watching play this morning for the short. Anytime it gets over that 46 area, we could short it. We'll wait and see here. Tesla on its way down. Interesting candle here. I did not take the Apple trade, not on this first candle. Thank you for sharing that, Jonathan. We appreciate that. Okay, beautiful on play. Let it get over 46. And we could short it through 46 on the downside. Okay, there we go. So we're going to call it short 46. Maybe get 46.50 here as it starts to run up. Okay, watch the 46.50 as it starts to go. Okay, there we go. Anything under 46.50, I'm going to short this stock. I'm going to add under 46. See what happens here. Okay, I'm short the stock here at 55, 46.55. I am short. Now, stop loss will be 48. Yep, 48. And target's going to be close to 44.50 on this stock on play. Let's go. 4655 entry. Looks like we're going to have to be patient with this. There goes GME. Okay, Apple coming up. Apple, we're going to go 215. I'm long the stock. I'm long Apple, 215.04. Looking for 216, about $1 higher here on Apple this morning, AAPL. $44.5 on play, PLAY. Apple again, 216 target on Apple. Go play go. 44.5. Go play go. 44.50 target. Watching Apple to the upside here. You got about 50 cents to go on Apple. Go Apple, go. Wow. What a nice move on Apple, traders. 8 cents to go Apple. 216 break, I'm out. Go, baby, go. There we go. Boom. Got it. 216.18. First trade of the day. We got that one. Beautiful move. $1 to the upside on Apple. AAPL. First trade of the day. I love it. I love it. I love it. Super. Super move. 215.50. 215.50. Coming up to it. Watch it. Nice winning trade right there. We got play now. Needs to come down at 44.50. Come on, play. 44.50. Go, play, go. Out of all shares, Apple. All shares, Apple, gone. I love that. I love when we get it right. I'll tell you what, under 45, we can add the full share size here on play. That's what I'm going to do. I'm going to add the full share size here on play under 45. Full share size trade now. Target 44.20. 44.20. Wow, this is going to be another great trade here. 44.20. I stalked you this morning, play. Dave and Buster's, I love it. Go, baby, go. 44.50. 44.50 to the downside. 44.50. Let's go. Let's go, play. Let's go. Yeah, I'd be willing to go back into Apple. Absolutely. Let's try it again at 215. I'll post it. I've already posted it here. Okay, got a little work now to do on play. Again, full share size trade right now. Okay, watch Apple. This time I'm going to add to Apple over 216. Just need play to fail here. Watch Apple. I'm going to add over 216 on Apple this time around. Go, play, go. Go, Apple. Break out the top here. I want to add to it 216 over 216, yes. Play, just stay under the VWAP. Second trade today in Apple. Go, baby, go. Full share size here, 216.50 target. I'm going to come out 216. Go, baby. There we go. There we go. There's a 216.50. I'm out. 3/4 of the trade on Apple. Second winning trade of the day right there. AAPL, full share size trade. And we are off to the races today on this Thursday in the 44 trading room. Beautiful move on Apple. Thank you so much. Now we just need the triple here on play. Play to the downside again. 44.50 break. And we're going to be really, really, really good. Love it. I love it. Play underneath that VWAP there. Go, Apple, go. I'll take it. I'll take it. I think Microsoft should be the next trade right here. 441. Come on, play. Yeah, just a quarter left of Apple. Go, Apple, go. Yeah, all we need is play now to the downside. Play looking fine. $44.50. Love it. Love it. Let's go. Come on. 44.50. That's all I'm asking for on play. Get this triple working today. Got two great trades on Apple, full share size trades. That helps out big time. Come on. 45 cents away now. Go, Microsoft, go. Watch it here. 441 entry on Microsoft. Yeah, and I'm long the stock right here. Long Microsoft, 440. Stop loss on Microsoft. Target's going to be 442. MSFT, Microsoft. And here we go. Play. 44.50 break to the downside. I'll be out of play. I'll be covering that stock. 44.50. Go, Microsoft. I'm having a great day today. I don't know about you. I don't feel great, but I'm doing great. Come on, play. 45 cents to go. Okay, there we go. Go softy, go softy. 442 on Microsoft. And just waiting for play to break down. Yep, Mark, that's where I'm at. But I'll tell you what, Microsoft making me feel great now. Here we go. 442.20, 442.10. I am out 3/4 of the trade on Microsoft. Third straight winning trade today. 3 for 3. Microsoft and 2 apples. The only thing I need is play now for the downside move. 44.50 on the downside move here on PLAY. And that'll be 4 for 4. And that's what I'm talking about here. Posting your trades, taking your trades, sharing with you the entry, sharing with you the stop loss, sharing with you the target right here in the 44 trading room. Okay, so push the button. Let's go. Let's go. Great day. Great day. All I need is play. Could literally stop working, could stop trading right now. Go play, go. 40 cents on play. Yeah, watch it go over there and then take out the high of the day. No, you know, we started off Dow being red and S&P and NASDAQ green, and that's exactly where we are now. Dow's crumbling, though, down 220. NASDAQ up 127.96 and the S&P up 8.79. So out of the gate, we got direction on 2 of the markets. The Dow down, but we are on the right stocks in play. Go, baby, go. 26 cents to go on play, PLAY. Come on, play. Okay, traders, I'm coming out of all shares Microsoft. I'm out all shares Microsoft right now. No more shares left on MSFT. Okay, good trade while it lasted. I'll probably take off Apple too. Just 100 shares left there. Look at Tesla. Nice now. Come on, play. Make it 4 for me. Make it 4. That's all I can say. Make it 4. Let's go. Been stalking you all morning. PLAY. Go. 40 cents to go. 33 cents to go on play PLAY. Go. Yeah, I'll be watching NVDA for a possible entry as well. Real nice trading this morning so far. $0.27 to go on play PLAY. I'm going to level up here on NVDA. Take a look at it under 128.50. Go, baby, go. Now we got it. Beautiful, beautiful move. I'm going to buy into it right here. 44.39 is my cover point, and I've covered 3/4 of the trade. Full share size trade on play. That's 4 in a row, traders. 4 for 4 today. And play just finishing off the morning here. This is fantastic. I love it when it happens like this. Buying to cover right there at the 44.39. Couldn't be happier. What an incredible morning. 2 trades full share size, 1 we added on, and the play trade now dipping below. I'm going to hold on to it for the break of 44. Sweet, sweet trading so far this morning. Hopefully you all have joined me. Hopefully those of you that are on YouTube following this morning, you've had some good success too. Ron, Roger, Norm, Charlie. Yep, no doubt. Yep, took a little while, Charlie, but we got it. We got it. Wow. Big time move now on play continuing down. Right at 44 is decision time. I'll probably come out of the rest. Yeah. Go. 20 cents away now, 11 cents away on play. $0.13. Come on. Come on. Go play, go. Watch it dive under 44 now. Watch it dive under 44. I'll take that. Go play. I'm going to be patient with the trade for sure. Why not? Okay, I'm going to come out of all shares play right now. I'm done with the trade, PLAY, 44.50. Now, what are we doing with the GME now? That stock is failing. Nothing. I have nothing right now. I'm out of everything and I'm flat. Take a look at NVDA, Justin. I like the 129. I always have. Yeah, right. Yeah, I feel like crap, but I'm trading great. I'll take that. Yeah, Jimmy, love it. I love it. Come on, come on, come on. Give us another opportunity here. Okay, I'm going to take the Microsoft trade. If it goes under 441, I'm going to try to get it back over 441. Come on. Okay, let's see. Microsoft's going to be 441 on the entry here. I think I've already listed. I have already listed it. 441 entry Microsoft long. Now, on the Microsoft trade, 441 entry, which is right above that VWAP, 442 target, and 440 stop loss. Pretty simple. Come on, Microsoft. I'm long the stock right now in Microsoft. Long Microsoft right now. Yeah, I've heard from Mayor. I got Trade Tricks. I got a message from him the other day. He was traveling, and he's doing very well. Very well. We should probably see him in the next week or so. He's going to be back in the room. Yeah, he is. He's living the great life. We're working hard here at the 44 Trading Room. We got 70 cents to go. Hold on just for a second, traders. Again, I'm still on the Microsoft trade. I've just got to message somebody. Okay, there we go. No problem. Okay, back on with Microsoft now. Well, I'll tell you what, the SPY might drop, but the triple Qs will not be dropping today, I don't believe. Come on, Microsoft. Let's go 5 for 5 today. NVDA popping to the downside. We're just kind of treading water now. We've just slowed down immensely here. S&P just turned red by just a small margin. NASDAQ's only up 62 points. Dow's down 229 right now. I am, Jimmy. I am. I worked for General Motors for 25 years before I went out on my own. And always been around cars. Enjoy them. Get into them. And what can I say? I was just in a Ferrari this morning or this weekend, an 812, which is the 12-cylinder 2-seat convertible. Sweet ride. Yeah, stick up, Microsoft. That's good. Yeah, very good, Lee. How long were you with them? Yeah. 440 is going to be my stop loss. Tesla failing here. Maybe an opportunity to go long. Go Microsoft. This will be number 5 today. Yep. Holding up pretty good, Microsoft. We're in this trade at the 441 mark. Come on, Microsoft. NVDA getting raked down to the bottom here. Microsoft going in the opposite direction. I got to love this trade. Go Microsoft. Yeah, 25 years I was in marketing and sales as an executive over the Buick GMC brand and Chevrolet brand. Yep. Really enjoyed it. Enjoyed my time. Enjoy trading more though. Come on. Come on, Softy. Look at you go. Look at you go. You know, my fifth trade of the day and fifth winning trade right now. I'm not going to give up on it until we get to target. Target's going to be that 442. We're right there right now. Come on. Come on. You're looking good. Let's go. Put the juice on. Go. Okay. I'm going to take it right here. 442.30, and I am out 3/4 of the trade right here. 442.30. That is my 5th winning trade in the road, traders. 5 winning trades today. What a way to start the Thursday. What a way to start the Thursday. Incredible. Incredible. Thank you, thank you, and thank you. Those of you that are in the room, hopefully you're doing as well as what I am here this morning, and taking a look at our YouTube community there. And how was your day today? We'll start this off. I am very green. I've really had an exciting morning today. 5 in a row here with several full share size trades. Yeah. Okay, beautiful. That's 80%. 83% of the people here in the room are profitable today. 83%. And those of you that are on YouTube, you want to come into this room and experience the same thing, you can do that. Slide on into the room, 7-day free trial, or you can sign up for the monthly, quarterly, or yearly plan. We'd love to have you. Thank you for joining us. It has been great. Thank you for all those that are participating there. 87% of our traders today are profitable. 87%, just an absolutely outstanding number here. We are rocking and rolling in the 44 trading room. Yep. Okay, beautiful. We'll shut it off. 88%. 88%. Thank you for those that participated there. 88% of our traders profitable today, and that's important to me. It really is. Yeah, understand, Lee. I know. Yep. You're welcome, Nikita. Go. No, I mean, one of the things that, one of the things that that I've been talking about recently is, do we keep the room open all day, right? And wanted to get everybody's opinion on that. Is that going to be the key? Do we just trade? There's a lot of rooms out there that I've been noticing that just trade the morning session, right? Like I don't really trade after the morning session when Michael and Aggie are here. But I'm wondering if the community, if the private community here would support something like that. The room only open from morning until noon, and then keep the room open, right? But without moderators, you all can post and do stuff like that. Or is there lots of value to have somebody here all day long? I agree, Jim. I mean, that's my opinion. Again. My opinion is I don't trade typically after 12. Yeah, so I mean there's going to be people some people just trade the afternoon sessions because of work and stuff like that. So I don't want to alienate people, right? Yeah, okay. That's good. That's probably what I thought. I was going to say half and half. Okay. 70-30, 60-40 in favor of all day room. I got you. And that's what we'll do. We'll keep that going. Again, I think the key to having a great room is a room that's run by the people that are involved in it, right? So we've got to do as everybody wants to do, the majority, right? You can't do it for everybody. So some people are going to not like it, some people like it. Okay, 80-20, stop poll. Perfect. All right, yeah, I see. A little bit, Steve, but you know what? I'm going to retain, both Aggie and Michael and Clifton here. So it's the core group. So it's not really a savings. It's just doing what everybody wants to do, right? I guess I'm blessed to be able to make that call, but at the same time, we've got to want the room to be fruitful. I want the room to be engaging. I want the room to be a winning room, right? Yeah. Yeah, price will be the same. Price would be the same, yeah. Yeah, that's true, Steve. Right on. Yep. That's right, Jimmy. That's right. Okay, Trace, I'm taking out all shares right now. All shares Microsoft gone, plus $1.50 on the last. All right, good. Yeah, that's good, Lee. I'm with you. Yeah, absolutely. Yep, I agree. We did. Yeah, it won't matter now. Whatever Microsoft does, it does without me. Maybe NVDA. We're going to watch. Yep. We're still doing that new format. It's coming. Just had a little snag to get it done, but maybe in the next 10 days. Be transformation of the room. No, he's hey Jimmy, he's not locked out. We'd love to have Amir in the room. I don't see him on YouTube. I've seen him. I've seen him there before. He's a personal friend of mine, so he's more than welcome to be in the room. Yep, no problem. I communicate with him on a monthly basis. Can you give us a clue as to what the transformation is? Yeah, a new look, Jimmy. New look for the room. I'll leave it at that. Easier to access and a better look for the room. Wow, Microsoft. Wow. Yep, I'm out of it. I am out of it. I mean, almost tempted to go NVDA long, but I'm cautious here. AVGO over that VWAP line. I mean, 129, I think, is safe on NVDA. Excuse me. I mean, it'd have to get over the VWAP, I think, for myself. Yeah, looking really good now. I mean, the market right now, not too bad, right? We started down, and now obviously the Nasdaq's the only one up. It's only up 40 points, so we've gone from a triple-digit move to a double-digit move now on the entire market. So we'll see what happens here. S&P down 7, Nasdaq or Dow down what, 261. I think I'm going to take one more trade here before we get into the lunch hour coming up here at around 11. Couple of minutes. I'll be with you through the hour. I'm going to take a little bit of break, just blow my nose and get something to drink, and then I'll be right back. But we'll do that in a little while here. Play looking good. If play gets back to 46, I'll be shorting that stock. And then the next trade will be NVDA 128.50. I'm going to post it here. Hopefully this will happen before lunch here, 128.50. And stop loss will be 127.50, and I'm looking for that 129 up towards the top. So let's get into this one together. NVDA long. Got about 25 cents to go. No trade, NVDA. In fact, we're going to probably bring that down here. Now, 128. I'll repost it here, 128 NVDA. Just a small share size trade. Every time it's come down to touch it, we bounced. Okay, watch NVDA. Play running up too. Okay, I am long the stock 128.04 NVDA. The low will be my stop loss. $128.50, unless we get some volume, I'll add to it at $128.50. 128.50 target. You're going to add, Justin? I'm going to do that. I'm going to do that too. 128.50. I'm going to add. I won't be full share size, but I'll be up there. I've just added to full, not full share size, but just added twice as much as what I had here on NVDA. Going for 6 of these in a row. Let's go. Let's go. Watch that VWAP line. That's where we're going to come out. Go NVDA, go. That's all I got to say. Come on, NVDA. Don't let us down. No, I think we're going to see some more upside here. I mean, it's lunchtime. It's going to get a little slow, but that's okay. Give it about 15 minutes here on the NVDA. Okay, DVG, we'll see you back here in a little bit. Still on NVDA. Yep. Microsoft at the high of the day. Stop loss will be at the low of the day on NVDA. Yeah, NVDA not doing much at all, really. Just kind of sitting here. GME starting to go. That was the one stock that I probably missed. Apple treading thin water as well. Yeah, really need NVDA here. I mean, it's not gonna crush us. I would just like to have that nice nice win-loss record for the day, going for 6 for 6. We're 5 for 5 right now. Yeah, I'm 5 for 5 limited today. Yep. NVDA would put me 6 to 6. Go, NVIDIA. Watch it at that VWAP line now, the blue VWAP line right in front of us. Watch that blue VWAP line. Yeah, we almost had the NVDA trade. I'm going to continue on with this trade. Go. Okay, traders, I'm going to take a little bit of a break right now. I will be back at 12 noon. So I'm going to get something to drink, and then I'll be back. I'll take you through till 1 o'clock when Aggie will come in. So just give me a couple of moments. I'll be right back. NVDA right here, right now. I think before I go, I'm going to take some off because I'm going to go get something to drink, and I'll be back here in just a little bit. Our 128 entry on NVIDIA is going to now give us 69 cents now 70 cents. And I'm going to take 3/4 of the trade off here. Just 200 shares left on NVIDIA. That is 6 for 6 this morning, traders. And I couldn't be happier with the performance that we've had today. Just an absolutely stellar day. And really pumped about that. So, okay, I'll be back in about 18 minutes. And I think Clifton will be here for a couple more minutes. And then I'll come back into the room here. Just chill, post your trades. And I'll be back here in just a little bit. NVDA, hopefully be a rocket ship, DVG. Okay, traders, I am back. Take you to the 1 o'clock area. Okay, perfect. Okay, traders. Yeah, I came out of the NVDA. I just have 200 shares left now on that trade. Yeah, Apple tried to close that gap today, just didn't make it. So that's sitting there. And as we look at going into and out of the lunch area here, any type of pullback I think can be bought here. Okay, let's see. Microsoft now rolling back over. Interesting. I think longer term today, as we fade into the close, maybe play for the short side. Uber, Vincent. Let's take a look at Uber. I would stay short under 70. Watch the NVDA. As it pulls back, I want to get long this stock. I really do. If anything, Uber would be the short. Yeah. Now it needs to pull back just a little bit more. I don't want to sit here and try to clip it right here. Although the VWAP line would be an interesting entry, but you could see as the example from before, if you go to the VWAP line 128.75, you're only going to make a quarter out of it unless it starts to break out. Microsoft just took out yesterday's close. NVDA coming down. I think we'll go 128 again. Amazon. Take a look at Amazon here. Was not on my radar today. Yeah, it gets underneath that VWAP and accelerates down. Yeah, Aggie's going to be taking you through to the close of the day. We'll get Michael back on Monday, so probably same thing for tomorrow as well. I'm going to post it again, 128. I'm 6 for 6 today, so you know the Grim Reaper is right around the corner. $128 long, and stop loss will be bottom of the day. I am long NVIDIA right Yeah, right on, Jay-Z. I feel you. Okay, I am long NVIDIA. Stop loss will be under the lows. Yeah, hopefully it just stays up here. I've been to the city. I've been several times in New York City. Yep. What do you have short, Linda? NVDA or no? Yeah, if NVDA breaks this low right here for sure, you can get in there 127.40. Come on, NVDA. Come on, NVDA will be the crown jewel today. And there's the break, almost out of NVDA for the first losing trade of the day. Gonna hold on. 127 and a quarter. I'll be gone. Okay, traders, I'm going to turn it over to Aggie now, take you through the remainder of the day. I am just holding on to NVDA. That'll be my last one. Absolutely 5 winners, 0 losers. NVDA could be the first of the day. It's not going to affect me that bad here. Once it drops the low, we'll take that 127.25. And I'm going to come out of the out of the trade here. So Okay, I am out. Gone. 5 winners, 1 loser. Thank you for joining us today. What a great, great trading day. That's 2 in a row, 3 in a row now this week. Awesome. Awesome. All right. There you go. Yep. Okay. Ag, you'll be in here shortly, traders. Everybody have a great rest of your day. God bless you all. Godspeed. Thank you, everybody on YouTube, for watching us today. If you want to come into this room without the delay, without anything happening on the YouTube channel, you can do that. 7-day free trial. Roger Diaz, the rest of the team on YouTube, thank you for joining us. Smash the thumbs up button. We will see everybody tomorrow. Everybody have a great, great, great day. And God bless y'all. Godspeed. We'll see you tomorrow morning. I'll take over the room then, and we'll go from there. Take care.
Hi, traders. Good afternoon, everyone. Thank you, Scott. Hopefully, you are going to get better for tomorrow. How are you
Thank you,
today?
Aggie.
Hi, you traders. Ah, you are still here. Yeah, I had to reload the room. Sorry. Just could not see if my mic is on or not. Okay. Hi, Linda. I missed you from the morning session. I guess lots of job, right? Busy. Okay, but at least hopefully you can be here with us for this afternoon session. Traders, very nice trading day so far. I am back to green with the KMB. I took it long just the beginning of the day, and I was holding, and finally it's making a profit. In 9 minutes, it's going to be the 30 years bond auction, so please be careful. Overall market is quite weak today, especially the SPY. I see several stocks just gave up from green to red. Quite of an ugly pullback. Look at Amazon, Google. Google, I was suspicious on Google on the in the pre-market already. And the biggest miss, sorry, on my side, it's SMCI, because actually I called it over 800, but I did not take it. So, and it just made $70. Oh, not a big win, just a small one. And actually, I'm going to keep an eye, of course, NVIDIA, Tesla, AMD, it's over the 100 EMA, and the Viva, which can be interesting. But as I told you, I would like to see what's going to happen at 1 o'clock. I see, Linda. Yeah, it can be annoying, right? Okay, traders, so let's see whether the market can make a reversal here, especially after 1 p.m., or we do continue this this pullback, especially under the low. WMT mark checking, Walmart. On the highs, it still has room to go on the daily, but for that we need the market to continue higher, I feel like. Also, it's not that bad. I don't know. Inside the volume, it's quite low for the daily. Maybe only for a scalp if you want to take it. It's usually it's not my favorite pattern, unfortunately, especially in this lunch time. I'm going to try CRM for a bottom reversal about 230.50, stop loss under the lows. 55 is going to be my entry. Lower share size traders because it's very much still the lunch time. I'm trying to go for reversals at the moment. I'm wondering whether AMD can make it over 160. This is the next one which I'm watching. Microsoft. I've seen, Linda, you are looking for Microsoft for a possible short again. Well, it's just making a nice consolidation. 442 can be a long, but under this consolidation low, it can be a short indeed. Depends on the market whether we really can make a reversal here. I want to go for a 50 cents first on the CRM, 231, and let's see whether we can push back to this 232 level, which is the VWAP there. Yesterday close. Okay. JP Morgan. Yesterday I had a very nice short on the JP Morgan. Now it seems like much stronger or a small recovery. So I'm missing the volume here as well. I want to see it definitely over the 100 EMA. You called it 193. Yeah, I would say maybe 193.56, but yeah, looks interesting, Mark. Two minutes till the 30 years bond auction. Let's see if it's going to impact the market at all. Here comes the CRM. I told you I want to see first like 50 cents. Really, it's not in its best shape for today. Okay. Still has not touched the partialing point. Market is not doing anything. Here comes the bond auction, which I'm not sure it's going to impact the market, but let's see. Night traders, here comes the CRM. We want to see a 231 to take a partial. Sorry, I was on mute. So actually, I'm still waiting for the CRM. MU looks strong. I don't know if it can go over south 142.20. I would go rather 142.50. And the reason for that, we need a continuation on the market higher. And the market is just touching the VWAP. 30 years bond auction did not do anything on this market indeed. Come on, CRM, fight. We want to see CRM back to the VWAP, which is 231.50.60. Oh, come on, CRM, 25 more cents to go. Nice JP Morgan call. I did not take it, but just making the nice move. Well done on the JP Morgan. No, Linda, not at all. Not at all. Hopefully after 2 p.m. volume is going to pick up. Microsoft on the VWAP, which I'm watching as well. Wow, JP Morgan. Beautiful. Apple big pullback today as well. It's not that weak though, 0.17% only down, but definitely a profit-taking day for the Apple. ON, semiconductors still. You're right, because these are the strongest. Not bad. Low volume here as well. I don't know why the volume is so low on this market today. Oh no, CRM, don't trick me again. Looks nice, Mark, on the ON. I just broke the VWAP. Let's see if we can continue higher a little bit. Good luck with the MU if you took it. South. Nice, Mark. Beautiful on JP Morgan. MU working. Looks like CRM is working. 20 more cents to take the partial on the CRM. Okay, Linda, good luck. Yes, seems like the market it's just went over the Viva, but now it's pulling back. Yes, JP Morgan was a beautiful play. Roger, I just called CRM. 230.50. I am in and waiting for my 50 cents partial here, or so the market is just making a reversal again. Bulls are not in their best shape indeed. Linda, I was thinking on this Apple long as well. It's like a beautiful cup and handle formation for sure. It just broke. I'm not in. Just holding my CRM here, and yes. Mayor used to tell always that come to Papa, and I'm just telling CRM come to Mama. And this is coming. CCJ, okay. Uranium stocks are short candidates today. I don't know, Mark. Okay, here is CRM traders, beautiful. I'm just taking 80% of my share size stop loss under 230 and 50. Next partial should be around 231, 70, 80. All right. I have a feeling, guys, that maybe CRM is going to continue. Your Microsoft looks great. 441 really should be broken, Linda. On the Apple, I'm not that brave to take a long because, you know, just got a quite big dump today. Thank you, Roger. I hope you took it as well. Looks like it's a great double bottom here, but we need a little support from the market as well, indeed. Your QCOM short was beautiful as well, Roger. I was watching QCOM in the guidance, or not in the guidance, in the pre-market session. But then I did not watch it during trading, as we had several big movers based on the news. And I'm still I'm still holding my KMB traders. I took a 30% partial on that, or a 20 cents, sorry. Microsoft is looking good, but needs to break 441. This is what I've told Linda about the Microsoft. And I just took my 50 cents partial on the CRM. I'm waiting for this market to show something like a continuation reversal around this VWAP. This is what we need to see. SMCI is up 12%, amazing. And instead of a double bot or a top, it's just forming a bull flag. Yes, it is, Linda. And you know what? It is insane that I called it in the pre-market session over 800. And when I've seen the entry, I just missed it. I was so angry at myself. Linda, I think there is some reallocation between the semicon stocks because, you know, NVIDIA is over the split. SMCI, if you check the daily, it just got a quite of a big pullback, not big, kind of a pullback. So maybe there is a, you know, a hunt for deep buys. This is what I think. Yeah, AMD. Also, I don't get AMD either because AMD looks like as a great reversal here in this consolidation, bull flag, everything, but it just cannot go higher. I just don't get it. AMD, I don't get it. I understand better NVDA. Also, after the split, you know, it's Monday, Tuesday, Wednesday, yesterday it was good already, but Monday, Tuesday, you could feel that it just cannot find itself, like the new personality after the split. Yesterday, I had a beautiful trade on that, like several winners. Let's see if today for the afternoon it's going to show something. Because so far, not a big move. Had a it was a loser for me. Wait, I don't remember. NVDA, yeah. Was a small loser for me in the morning. Come on, CRM. Oh, nice, CRM. Okay, traders, I want to take another partial around 231.50. Just need a continuation here. SPY so far looks like as a intraday breakout. Apple just broke 213, Linda. Did you take it, this Apple? Nice break on the market. Come on, CRM. Pick up the speed here higher, please. Oh, okay. It's nice. Nice move higher on the overall market. Also, unfortunately, CRM seems like it's making a reversal here. Linda, I don't think so. There are news or there is any news. It's just the market, the usual market, you know. Trader's theorem is out. Unfortunately, it could not do the second run. Oh, it's okay. Yeah, Linda, I know, right? Nice, Linda. Great. Yeah, I'm watching Bitcoin, by the way, whether it can make a reversal here. Maybe I'm going to watch coin for a long here. And here comes the Microsoft break, which can be a good trade for you, Linda. Happy to. Great, Linda. Well done. JP Morgan was a nice trade as well. MU is still suffering there. And the overall market is dumping again. So seems like not a big strength for the bulls today for sure. Except of SMCI. Market is not doing too much, unfortunately. Going sideways on the VWAP, nothing else. Checking the big movers, but even the big movers are just going sideways. It's still the lunchtime, so let's just wait for a nice setup. I'm checking Marvel, by the way, possibly Meta as well. Marvel started very strong today, traders, and gave back almost everything. And on the Meta, I know it was hectic today, but I'm watching an entry possibly over this 50530. This is going to be my call, but everything is still only a scalp. 50530, stop loss it's under 50 330, so $2. Looks like Apple is giving up again. Just broke 213. SMCI is not giving up. I'm still waiting for the Meta and overall the market to start moving finally. Um, you guys. Sorry, I have a little bit of pneumonia. I am back. DAL, second. Not DAL, that airline. It was weak today. I don't know. Looks like it's a 100 EMA reversal. Yeah, not bad, but now then in this case we need the market to drop a bit more. Still cannot see anything which worth call indeed. So if you have any idea, I'm more than happy to see that. Market is still consolidating. Triple Q slightly under the VWAP, Apple or Google, no, SPY over the VWAP, and the Apple it just broke the 213 again. And I'm out of the CRM traders. I'm just waiting for the Meta at the moment. I just wanted to retake or re-long CRM, but look at that. It just moved like crazy with a big volume. So I'm rather not touching it at the moment. Meta not doing anything at all. So the market, unfortunately. Good luck with the DAL. Mark, market still not doing anything, but we still have 3 minutes to go here. Till the afternoon session really kicks off. And hopefully it's going to be a nice move on the volume side as well. You won't believe it, Linda. I was just watching it over 28, but I don't know. How about you? Just a bit afraid of this GME. It's quite of a consolidation, but no, I did not take it. I'm still waiting for this meta overall market to move because we just entered 2 p.m. traders last 2 hours, and seems like the market is still not has not decided on the direction. Nice recovery, but we need to push it higher now. Ooh, nah, you see. Did you take it, Linda? I did not. I was just watching and thinking of, we should take it to over 28. You did? Nice. Okay. Well done. I did not take it. KMB is breaking out with my last shares. Wow, I'm just holding to this stock for 4 days long, indeed. Amazing. Nice. Tiny, tiny, but green. Tiny green, green, doesn't matter. It's green. Okay. All right, traders. My next trade is going to be, I guess, NVDA over 129. Stop loss is 60 cents. So this is really tiny. It's okay. At least you took it. I was hesitating. I know, Linda. You know what? Maybe the share size is going to be the point by you. Yeah, BD, I agree. When things are working great, it's a good feeling. Also, this market is still not the best, but hopefully it's going to find a direction or at least a sentiment. I was not expecting that, but I'm expecting another run on the CRM traders again. So I'm going to take it over 231 with a stop loss under 230, like $1. Triple M, yeah, it was in the news. Mark, I completely forgot about Triple M. Not bad, but very low volume today. This is my only problem there. Okay, traders, so I am waiting for NVIDIA is getting closer. I'm waiting for CRM and Meta, and I see a big move to the upside on the market, which does not mean too much, actually, on this today's market, because it's quite ugly. But let's see if we can really get a sentiment finally. This is what I am. NVIDIA is getting close. Meta is quite hectic, but I just missed Meta in the morning. So I rather took my entry here. And NVIDIA is really close, traders. CRM not in yet. Nice BD, beautiful on the GME. I missed it. Okay, traders, it passed 2 p.m., but the market still looks a bit slow, fortunately. I'm still waiting for NVIDIA, Meta, and CRM. So the market is not doing too much at all. Trying to break 542. Let's see if it can. Actually, I like even Tesla over 185, but it's too much. And wow, Linda, how we could miss this beautiful AMD. Can't believe that. Okay, traders, NVIDIA entry is 129.05, has not reached it yet. Markets, finally the triple Q is over the VWAP as well, so we are more bullish at the moment, but extremely slow move. All right, guys, market is still not doing anything at all. Actually, it's just doing consolidation since 1 p.m. I still like NVDA. It's an intraday breakout. Stop loss, it's quite great. 50, 60 cents around. CRM seems like it's a bit weaker now, so might we won't get this entry, but Meta still looks good. Yes, Ricky, depends on your position management indeed. Still going sideways. We really need to see a sentiment there. So no, we need the market, and the market is not moving. This is the situation now. But guys, I encourage you to, to chat with each other. It's totally okay, because on a boring afternoon like that, when the market has no sentiment, you can just, ask the other about their trades, calls, anything like that. So I really do encourage you to do that, like to build a community. 1.5 hours to go, traders. Market actually it's slightly moving higher, but still no strength, no sentiment. Good luck with the Mara mark. Bitcoin is consolidating now, but at least it's not going lower. I still like this NVIDIA and Meta. I'm not sure about the CRM anyway. It's really far away from my entry. Seems like it just cannot get some buyers here at all. Okay, guys, here comes the Meta 50530. Traders, NVIDIA is in. Would like to see a 129.50 for a partial. Meta partial 506. And I guess I'm not going to take CRM because it's just going low. Yes, Rick, I am already in Meta 50535. All right, traders, still very slow move on the market. NVIDIA almost touched my first partial. Meta not doing too much. I really only hope left here for the power hour. Nothing. Well, Rick, until it's above the VWAP and the 100 EMA, I think it's still bullish on the triple M. But, the fact is it's just not moving too much, unfortunately. NVDA, 20 more cents to go for the partial traders on the NVDA. I really hope it's going to get there now. Overall market is still making slightly higher highs, higher lows. And here comes the power hour, which I really hope it's going to get this power in this powerless. All right, traders, very unusual, but we have to wait so long to take the partial on the NVDA. So I'm just going to take 80% of my share size here, 129.50, stop loss under 129, and I still do keep the Meta. Let's see, and no entry on the CRM. Actually, I'm just going to cancel CRM. So far, two winners for the afternoon, which is not bad in such a slow market, which is definitely going higher, and power hour is coming. Well, let's see whether this power hour is going to be really powerful. Yes, Linda, that was definitely a nice call. My NVIDIA is still doing great. Let's see whether Meta can do anything at all. But I must tell you, traders, this whole market is extremely slow so far. Only $1 move in the recent 2 hours, like in a range. Hi, Lee. Good morning or good afternoon to you. How was your day so far? Oh, really? Well, no surprise. It was a quite of a slow market today, especially after 1 p.m. I had only scalps since then, one on CRM, one on NVDA. I'm still in Meta. And imagine I just kept my KMB and it was a winner. So I'm back to green now. Only, well, for that day, maybe it was not a wise decision because of this yesterday big move, on the market. And actually, yeah, so you are lucky. Okay, traders, market is moving higher. My NVIDIA is still in with the last shares. Meta looks like back almost to the entry, and I'm not going to take Guys, still very slow market despite of this power hour. Nothing is moving too much indeed at all, unfortunately. I see yeah. Yes, actually, NVIDIA was a bit tricky today. I really hope traders, at least in the last 30 minutes, we will get some move here in this market. Unbelievable how slow is this today. Okay, guys, NVDA seems like it's moving higher. Meta is not doing too much, unfortunately. Still have 50 minutes to go. SPY slightly higher. Back to the highs, 543.19. It's the high. Now it just got a rejection again. Triple Q. It's not on the highs, but it's pushing slightly higher again. My stop loss on the NVDA traders, it's on the entry with the Meta, it's under 504, so only a half hour if it's not going to work out as I want to see that. Yes, I do. I don't know. Traders, give me a feedback on the sound, please. It's on half. Wait, I'll just push it higher. Thank you. Okay, Rick, I just increase the volume a bit on the microphone. Okay, guys, Meta is still coming here. That's good. Yeah, right, Roger. CRM is just crazy. I thought it's going to be a nice pullback today, but definitely it's still weak. We still need to wait maybe some days for that. Spy red candle again. Oh, come on, NVIDIA, another 50 cents, please. Meta is not doing anything at all, traders. Actually, might, I'm just going to close it out. 45 minutes, bit more than 45 minutes to go. And market is lazy. Oh my God. It's just doing this move like it did during the FOMC press conference yesterday. Like quite of nothing. So two winners. Let's see whether the meta is going to work out or not so far. Okay, Rick, good luck with that. Yeah, it did break the 100 EMA and the VWAP. So now it looks like as a short, but actually I did not like the whole trade because of the fact that this is an inside day. Yeah, Lee, I agree with you. Actually, to make the right position management in this hard market environment, I think it's good. So you can be proud of yourself indeed to manage this trade right. Yes, just put on or slightly over the entry, Rick, and you will be okay. Traders, my stop loss on NVIDIA, it's on 129 at the moment. Market is pulling back a little bit. Guys, I can't believe it how much this market is not moving even in this power hour. It's unbelievable. But seems like, yeah, Rick, you're low or short on the triple M is just making great. My NVIDIA is still hanging on, traders. So does the Meta. And well, my only hope is the power last 30 minutes. Nothing else left here. Yeah, to the downside, Linda. Yes. So seems like Elon's $56 billion paycheck is just hurting the Tesla at the end. That's a nice payment indeed. No, come on, Meta. 506, and I'm going to close you out. Spikes pulling back again. Yeah, I know, Lee. I know, Lee. Well, for that, you just you cannot take it granted, you know, that it's going to make the move again. I mean, it's nice to get the consequences and to see the pattern from the historical moves, but please just write this quote to you or this sentence that everything is really, you cannot take it for granted in the market and in trading. Even if you have seen it 100 times before it happened, it's still not sure that it's going to happen. Especially with this crazy market what we have now. Like yesterday, you know, I mentioned during this FOMC statement or the FOMC press conference, usually after Powell finished, 70 or even more, like I would say 75–80% of the time, the market is diving. But I'm not taking it as a 100% strategy. And I think this is the problem now, that you take it. Don't do that. So play it with the right share size, respect your stop loss. And you know what? If it was just a shakeout, you can, and this is what you can actually understand better and maybe write down. There is another opportunity to hop back into the trade. Okay? So it's better to respect your stop loss and go with the original stop loss and the loss indeed, than to be a bit more overconfident because you have seen it before and you are sure that it's going to happen. Because no, unfortunately, it's not sure. I know it's hard to understand, and I must tell you, I made this mistake. I really did this mistake. I've been in your shoes several times indeed in the past, and this was the only one. I mean, this kind of change in my thinking style, that nothing is for sure, even if you have seen it 100 times before. And rather respect your stop loss and get back into this trade than to lose bid. And never add to this loser just because you think it's going to work. Okay? I've lost several accounts because of that. Rick, but did you get a partial already on your triple M trade? Hope so. Yeah, you silly, exactly. Protect yourself, protect your account, protect your profits. It's crucial in trading. Less to lose, more to win. This is what we need to make it happen in this trading indeed. Okay, guys, 6 more minutes to go till the last 30 minutes. And I must tell you, I'm not sure whether this market is going to move at all. NVIDIA doesn't want to break even this 129.50 to go closer to this 130, but I'm still holding it. Stop loss 129.05, like the entry. But I'm still happy to have a green afternoon here. Traders, 1 minute. Okay, traders, market is still going sideways. As I've told you, my stop loss NVDA 129.05. Meta is still going sideways, and overall market not doing anything at all. Yeah, Jay, sometimes the Omnovia is doing these tricks. Sorry for that. Nice trick, yeah, it seems like it just got to support. Nice trade. I am still slightly holding NVIDIA and Meta as well. Overall market is not moving at all, unfortunately. Last 30 minutes coming, traders, and seems like market is still moving lower now. From the highs at least. I'm out on NVIDIA, still in Meta. Let's see what the last 30 minutes is going to get us here. Yeah, now it's going lower, that's for sure. Fortunately, my Meta does as well, which I don't like to see, but what can I do? Come on, Meta. You guys, it's unbelievable, but the market is actually not moving anywhere at all. Only sideways, that's it. So that's my meta. I'm out of the NVDA and no other trade at the moment. Come on, Meta. It's getting closer to 505 again, but actually, traders, there is no power in this last hour or 30 minutes. A very, very slow market so far. Yes, it's an interesting mark because Bitcoin is not doing anything at all. Meta is getting close to the entry again. Yeah, Roger, looks like CRM just cannot make a pullback at all. Nice trick, well done. Yeah, actually, I'm just holding this meta, nothing else, traders. Market is not able to move at all, unfortunately. We're going a sideways move since 1 p.m. And tomorrow it's Friday. Let's see what kind of news we will get Friday, which is the 14th of June. Not too much. 10 o'clock, consumer sentiment and inflation expectations. And 7 p.m. after the market close, it's going to be FOMC member Cook speaks. Nothing serious indeed on the news side. All right, traders. So I'm still holding Meta, but I'm ready to close it out because it's not moving at all, unfortunately. Oh, guys, that was a slow afternoon so far, and I don't think so it's going to change in the last 10 minutes. I'm just going to, I'm still on this meta, but actually it's just not moving at all. So not the best for sure. Nice mark. Actually, Microsoft was a nice reversal on 440.50. Okay, guys, last 10 minutes. Still holding my meta, but it's going to be closed out soon in a small loss. Thank you, Lee. You too. Traders, actually, I am done for the day as well. I'm just closing the meta in a small loss. So 2 winners, 1 small loser for the day. Thank you for your participation, your interaction, your support. YouTube traders, please just be aware that we can just, provide you live trading without latency. Just visit the 44 website for that. Thank you, Linda. You too. Beautiful call on the Microsoft short, by the way. Everyone, I'm going to see you tomorrow in the pre-market session preparation. After that, I'm going to trade with you an hour in the guidance room and take over the room from Scott for the afternoon session.